everybody. It is Wednesday, October 19th. I have to apologize. I believe I'm getting sick. I lost my voice yesterday, so if I'm clearing my throat and sounding all raspy, that's why. I will do my best to not talk too loud to make it not story. And I know it doesn't sound as glorious as usual. So, um, yeah, we are looking at NQ. It is lunchtime in New York, 12:27. These times are Central Time. We've got a couple charts showing here. I'm going to do some changes here, but I'm going to explain some new ideas I'm working on. I always got new things going on. Down in the bottom left, I've got the ES 8 tick. So I do occasionally trade ES, but I also use it primarily for watching for like hints on market moves. A lot of times when ES and NQ are not aligned, you get more challenging trading, right? It's just harder to get things to work. So I like to check and see if we're getting a setup on ES. And since it moves a little bit slower, I can usually kind of anticipate and kind of say, okay, well, I'd be willing to take a long if we, fell down below 3,700 and quickly retraced it for a scalp, right? So what would that look like on NQ? And then you'd look over here and you'd be like, okay, well, on NQ, we'd have to get it all the way down to 11,120, let's say. And that's a lot. We got a lot further to go on NQ. So if what that tells me is that if ES can trap down there, if it can go down there and bounce, then NQ might actually make a higher low, right? So just kind of being aware. I mean, now I've also got it on my other screen, like I have the actual candle chart, so I can see these things developing there too. But if I wanted to take a closer look here and just kind of see like what's the algo saying would happen there, and is it a valid signal if it were to like come down and bounce. And in this case, we would need a purple bar here technically, because we didn't have one here, but we did have the purple background, so sometimes that's enough. It's probably good enough. So let's see. What else do I need to explain? Oh, I know. One thing is the lines I've added here. I'm gonna take them off because they're a little bit distracting. But I wanted to share something I'm working on. What I'm hoping is that I can get to the point where I don't actually need these at all, and I can just have it signal me when we get the reactions I'm looking for. So what those are, I will share this because these are actually free. So, Two Fox, I believe is his name. If you Google TWFX, Sierra chart studies, he's got a website. I want to make sure I give credit, and he's got a bunch of studies that you can buy, and then he's got a bunch of studies that are actually free to download. But you need the license. You need the license to use them, and so the license is free. And I believe it's lifetime, but you have to like sign up with his service and stuff, and then like you just say that you don't want to pay for it, and you can get the free one. So if you jump through some hoops, you can get some pretty neat custom studies. A lot of them. These are all free, right? Look at all those, and lots of them are pretty cool. One of them I'm using right now is the Two Fox POC per bar moving average. So what this is going to give you is, first of all, you can get every POC inside of a Renko bar for free. I've already got that as my yellow line. That's pretty freaking valuable. I'll tell you that right now. I use that all the time. It's already built into the trade and perform algo, but it's as far as I can tell, it's the same. All right, I didn't build the trade and perform algo, but it appears to be the same. If I turn it on, I'll show you. So if I make this dash, just like my trade before one, but I'll turn orange, watch. See, there's nothing new because it's exactly over the yellow one. So it, here, we'll do, what if I do stair step? Can you see it now? Yeah, see, it just connects all of the POCs. It appears to be the same. And like I said, you can get it for free. Pretty cool. So we're going to know that because I've already got it. Then what the other three lines that it adds are moving averages based on that per bar POC, right? So rather than the moving average being based on the close of the candle, which for Renko kind of doesn't make sense, because the candle's close is just how far it's just when it's reached like 15 points from the opposite side. So it's like that actual, it's important to know that we've gotten there, but is it the close of the candle that I want to base like my math off of? Maybe not, right? And so the idea here is, well, let's base the moving averages off wherever most of the volume was inside of that range. And suddenly you get, no, you know, it's not magic or anything. You're not going to be able to like do moving average cross trades and stuff like I wouldn't use it that way personally, just because that's not the way I trade. But what I am using it for is to identify whether or not like multiple time frames are aligned or not. So what I've done is so the pink one is a 10 weighted moving average. So over the last 10 bars, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So over these last 10 bars, if you took all the dashes, right, where the yellow line is, and you averaged them, and you weighted the bigger volume ones, bigger than the smaller volume ones, that average would be right at this pink level here. And again, is the market just going to like bounce right off it like magic? No, but you can almost think of it like a VWAP, right? Only based on the last 10 bars. It's a little bit, it's not quite the VWAP, but it's kind of similar, right? So see how in this case it did come back and it had a reaction off the pink line. So again, I'm not trading based on that, but I'm seeing that happen a lot. And so I thought, okay, well, let's put that on my chart. The other thing I noticed is that when the further away they are from the other lines, the bigger the extensions, and that makes sense. The more clustered they get, it's almost like a TTM squeeze where like you have to wait for it to like negotiate out of that area. And once they get spread out, it gets a little bit better. So the orange one is the 49 weighted moving average. So again, over the last 49 bars, right? So all the way back to here, and the other one's 150. So this one's all the way back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10, 20, 30, 40. Back to here, right? The average is here, right? So from here all the way, the average POC, where most of the volume was within that 15-point bar, was about here. So and then like I said, what's important to me for these lines is to look at the direction that they're going, clearly down, right? But and also the how fast they're moving. And I plan to use their rate of change and derivatives of rate of change to build some useful signals. Because what I'm finding is, if you, like I said, if you look at the pink one and you notice what its behavior is and what its like rate of change is, and then you look here at the orange one and you see that behavior, and then you look at the green one, which is the 150. So we're talking almost more than 3 times as long as this one. The closer this orange one is to the green one, the choppier it's going to get. So see, when you get orange and green nearby, well, now you're going to get balance. I shouldn't say choppy, it's just sideways, right? Balance. So, and then let me show you what it looks like. Well, we might be headed there right now, actually, if this continues. Let me show you what it looks like when they start getting further away. So here, so they squeeze down here, see that? Balance, accumulation. And then see how they start to spread out in order, like a fan? So right here, that range is expanding, and then you just have to ask, well, which way is it expanding? Well, it trapped some shorts, and so it's probably expanding higher. And then it expands to see how far apart these get. Now, eventually, they get so far apart, these two, the green and the orange, yet the pink stops extending so fast. See how it's like, it's not divergent, let's say, but the if I had a rate of change down here, it would be. You can just tell because the like if you look at what price is doing, right? Higher high, higher high, higher high, higher high, and then the pink line, it's gotten outside of the bands, right? And notice that these are like the bands are above all of this. They're nowhere. They're not in the middle. They're way up high. And then if you look, the pink comes back into the bands, right? That's fine. That just means rest. That's not a reversal. But then it tries to get through the bands, and it rolls over back into the bands. See, so right here, right there, that guy with the pink. I've changed some colors here too, just because I can explain it if you want. But that guy right there with the star and the pink diamond there. So again, sorry about my voice. I feel okay, but I must be getting sick because I definitely feel a scratchy throat. And like I said, I apologize if I'm doing my best to speak regularly. It's just a little bit strained. So the pink one here indicates to me that there's a volume anomaly here, right? And so when you've got what you would normally expect is volume anomalies are that on a bullish bar, a bar that closed bullish, if it happens at the apex on the other side, like if we got it here, if we got it down here, right here. So when you get it down here, right, volume anomaly, well, that probably means that they're trying to save the level. It does not mean buy, but it means if it traps behind it and it comes back and it gives me a signal to buy, that this one's probably going to work. And then the other thing is, once you've traded behind these, pink and purple, if you then reclaim it, you can assume that that's the side that is going to be the more powerful side. So then if I get trap trades like this, see how these orange and the yellow, like those are bearish signals, right? But they're getting trapped. They're not getting anywhere. See, normally those orange bars and the arrows produce down rotations if you're at resistance. Well, this is supposedly resistance, right? It worked here. And now they're trying to trap them. And look what pink is doing. It's rising, right? Don't short. So again, these start to fan out. We know we're expanding. We wait till it gets outside. Okay, that's the first opportunity once it's gotten outside to consider taking a counter trend trade, but it's going to be a scalp. Okay, and you know for sure that if we clear this, since it's got a volume anomaly, that it's clearly still bullish. And we do. Right, this is the actual entry. If you were looking for a retail, what's it called? A continuation is after they reclaim the pink line and also break through the channel, indicating that price wants to be higher. And then we got a speed trap signal and a star. So all of that is good. Then you can see that the pink line comes back in, right? And then, like I said, starts to have a little bit of trouble up here. Let me turn my microphone up, just make sure you guys can hear me. I realized I have to talk kind of softly, so here, I'll try to point it to me a little bit better too. There we go. If you can't hear me, let me know. So yeah, the pink gets stuck, right? Now, I took this, and like I said, it makes sense. It made sense to me at the time, but now that I'm watching this more, it doesn't necessarily mean just because we're getting stuck and we get a signal to sell that it's ready to go. It's just that trend is losing power. And so even though this is a valid signal that just happened to, like, it got my risk off and then it stopped, and then in the next one, this was the entry, is the trap back in. But that's what I should be watching for when it can't get back into the channel, yet price made a higher high. It's like I said, it's not true divergence, but it's basically that it's slowing down significantly. So that was one I missed, right? Um, and so market must be moving. So then what you'll see is the this one here is not, it's a different kind of moving average, this gray one, but it has kind of a similar behavior where you can see it's trying to come up and break through this lower channel, yet price is rolling over. Something's wrong with that. That's not bullish, right? That's like, it's like they're trying to break out of it, yet it's not going to happen. So you don't want to buy this, you want to short this. And then you can see the pink is clearly dropping, so it's going to act as resistance. Doesn't mean you can't trade over it. But when you get rejections like this with an algo signal, it's pretty good. Then you see we come up, we get the 20 and the or whatever the gray one is, it's 20 something, I forget. And then the pink one falling underneath the orange, which is 49 weighted moving average. And they give you another attempt to buy here, but you can see that your resistance is this cluster right here. So you could take it, but you'd have to take profits at the cluster. It doesn't even reach it. It gives you a short signal. All of the lines are dropping, the channel's dropping. It's bearish, right? So you can take that. And where are you targeting? Back to the 150, right? They try to front run it. That's a sign that we're probably going lower. And then, because like I said, these are all dropping, and so resistance is right here. And rather than wait for support or where the average volume was over the last 150, they're trying to save it right here to get back into the channel, and it fails right at the pink line. It's gonna trap underneath the pink, like the green. Sometimes these traps work if the other lines are flattening. The orange one is starting to flatten, but the rest are not. And the green is flat, but we're just trying to trap over it, because when these are flat, they're easier to break. So, but you can see the pink, and the channels are just, careening down. So they reject. Now there's our 2-hour VPOC. We reclaim it. They reject off it. So that's where I get the yellow, is that rejection. That's usually bearish right here. And what you see is that they try to save it. Okay. The 150, the green acts as resistance again. They signal short. They can't get past the voodoo range level. Guess what? It's not bearish for the moment, right? You get a bounce. That bounce goes through all of this cluster. It's going to have to come back and renegotiate that. This is the worst place to trade, when they're all clustered up. If you can't see shit, don't trade shit, right? It's shit trading. This is your best. When someone in the room got this one, this is your best chance, because it made a higher high, and then remember, it's getting choppy. So what you want is higher high, lower low. So once it makes the higher high and signals, and it reclaims the POC, that's the time to short it. Now you can use the cluster as resistance, which is here. Okay, they get into this likely support zone. We get a bounce with an arrow. Where does it go? Back to the cluster. Then it comes down to the bottom of the channel. Goes through the cluster again. Guess what? We're going to have to renegotiate this, because it ripped right through all those lines. It tries and fails, right? That's pretty bearish. Okay. And then we reject off it. And so these are all your entries. I missed that. So that's how I'm using those. You don't need them, right? Without them, let me just make sure this is saved. And I'm going to show you. I don't think it is. I've got a lot of studies. Okay. Save. All right. So we're falling now, and like I said, I think there might be a news event already. I think there's like a bond auction. There's a BOE speaker, and beige book coming up. But double check that we're not I don't think there's anything new, as far as I can tell. Let's see. Make sure we're not trading into some new information. Nope, I don't think so. I think it's just what's already on the calendar. They're just blowing it up. Cool. So I was gonna show you without. So without them, you have this, which is easier to see, right? I left the gray one on, so you could. But and if you kind of have a sense of where they are, you really don't need to have all of them on. See how like you can just use the channels in the line. So that's what I've been doing. Like that's what's happening over here. Like my actual trading is on this, but when I'm trying to figure out like why is it not going anywhere or what like should I be even thinking about trading this, I will turn on the lines and I'll see like, oh yeah, we are clearly bearish, and then I can mark off like, okay, if we can get we'd have to get through, like I've got the gray, I'm gonna have the gray one, so it's the pink one's underneath the channel, so I really don't want to buy there, but I can watch this one and say, well, if I can get, oh, but if the pink can get beyond it, and then or it rejects here and it can't get beyond it, either if it gets beyond the channel or if it gets beyond it and then gives it up, that's what that'd be my first sign of something changing. Otherwise, I'd have to watch for these to fall through some of these important levels, because then that means that resistance is below those important levels, right? So I could mark it. I guess I've already got those marked, but let's say, and then this one already went through the VPOC. So that's, at this point, you really don't need the extra lines, right? You can already see where they are. So in this, with like a click of the button, you can turn them off so it's not so distracting, and then just kind of like check in on it, right? That's how I'm how I'm dealing with that, because I really want to know like what their behavior is, and I'd like it. I'm gonna have it coded in to new signals, or else just make it so that like I can't get signals until certain situations happens. That's a work in progress as well. But yeah, I'm hoping that will help me like identify these shorts here. I was talking to all you guys and missed it, but those would be that's what you would get from that information, is that these shorts would be good, and then you can just skip these, right? Like you can skip all of these. So, oh, I was gonna talk about the color changes. So I changed the color of the volume anomaly on the buy side. I had it blue, and I was seeing the blue, and I was getting an emotional reaction, because I associate blue with the arrows, and that's often in bullish markets. It's often a sign that it's turning, but when it's not bullish, they don't create pivots, right there. It's an attempt to pivot. It's not a successful pivot yet, and like I know this, but because I saw the blue and it was so big, and I just have seen so many of those trades work where I see something blue and it works, I was getting an emotional response to it, and I'd have to like pull myself back and be like, oh wait, no, that's a volume anomaly. I don't want to take a trade here. So I'm like, you know what? If I want it to be a warning to me, it should look similar to the pink ones, which are also warnings of like, it looks bullish, but it might not be, right? And then the purple looks bearish, but it only is if it looks like a bearish candle, but it's only actually bearish price action if it's in a bearish trend. So like this purple is very strong. This purple is a sign of like market weakness, basically. Like the bears have control when you can put in these purple bars and continue lower. Where you don't want to see them if you're bearish is when it's like balanced or bullish. So like here, now the purple bars that give you follow through get beat. See that? Purple bars get beat. Not the place to short, right? So you have to be aware of what phase you're in, basically. Am I in a bearish phase like this? And like I said, like you can use those lines to kind of help you see that. Or am I in a bullish phase, in which case it's all flipped, where now the pink bars would not be the weak ones; those would be the signs of strength, and then these pink bars would likely create reversals. Whereas now it's the purple. So like this one didn't immediately create a reversal, but you can see when we reclaimed it, we knew at that point that it was bearish, and so then you actually short this. And I know that's a little confusing, but it's just pattern recognition. It's because there's so many variables, and because I have it set up to like let me know about so many different trades, I can't really have it just be like only show up if you want to trade it, because it's like there's times when this exact signal, like what occurs to put the orange bar in, there's times when those exact conditions are there, and it's definitely not a short. So you can and it's things that are relative, like those conditions are relative to what's happening in the market. Like if it's making lower lows, if it's making lower highs, things like that, right? That I can see very easily, but it's really tough to like program the algo to know what phase it is and whether or not I should even be thinking about taking a short. That is a lot harder to program into the algo than saying, imagine I'm bearish, where should I get short? Right? So that we've gone with the latter, where if it's bearish, orange bars, red diamonds, yellow stars, they're gonna be good shorts most of the time. But when it's bullish, they're not gonna work. And then vice versa, when if you watch for like the bullish side, like the diamonds on the bullish side, not gonna work. The stars on the bullish side, the green bars, right, not gonna work because it's bearish. So you have to have a way to, you have to have something that shows you what direction you're going, and so that's why I have the lines. That's what I use all of the lines for, is what phase are we in, and what would I need to see where I would think that has changed, right? So the actual bar signals tell me either it's setting up for a trade, or this is a location for a future trade, or it's an exact execution point, right? And that's just a matter of learning like the playbook, which it did take me longer than I wish to admit, but for many of you it wouldn't, because I'm just a stubborn learner. Let me just see. So we're at new lows on both the S and NQ. There must have been some news there. There must have been something. I don't know. It doesn't really matter, but that was a pretty big rollover. Someone else tell me. Like I said, I just didn't see it, and it doesn't really matter. But we were balancing pretty neatly, and now it does not look like we're doing that anymore. So, but I know there are at 10 o'clock, I believe. I think it's 10. There's a bond auction, so it might be in preparation for the bond auction. And then I know Kashkari was speaking, so maybe it was related to that. And then we've got Beige Book in an hour, so people, and that's economic based, and no one expects those numbers to be good. So it would make sense to do some de-risking here. Yeah, so there's not a whole lot to do at the moment. We wanted this one, and now we've gotten underneath the channel, and it's not surprising that it's acting as resistance. We could be aggressive and try to short down here, but then we are really shorting in the hole then. And the problem is our target is underneath this volume anomaly. Like, see, that did trigger short, but the target is like under this pink one. That's my indicator that alerts me that we're trading further than we should if we're in balance. So I did not take that short because there's just not enough reward to my risk. And if we are in some kind of balance state, we've now gotten through my line in the sand down here, the red one. which is based on a volume area low from yesterday's low. So that consolidation into yesterday's low, that wave. Oh no, I'm sorry, wave to the high. It was wave to the high. So the value area low of the wave to the high. Pretty important that we save that if it's still without holding this, we've then exited this whole balance range. Let's say that. So bears are knocking on the door here. Okay, come here. You're so noisy. Okay. Here, you want a blanket? I know you're naked. Oh, come here. This, I tell you, man, Sphinx cats are really smart. He's learned now that, like, if I lean forward in a certain chair, like, I cut his nails sitting here the other day, and now, like, all I have to do is lean forward and grab at, like, anything on my desk, a pencil or whatever, and he's like, get out of here. He knows. He's like, oh, that might be the nail clipper. He's just way, way, way too smart. You'll get over it. So let's see if this super aggressive short would have worked. It's got a volume anomaly on it too, which probably means it's going to trade behind this regardless if it's bullish or bearish. But we'll see. Yeah. So if you wanted to put the, hold on, I shouldn't hear the beeping. Wait a minute. Something's, no, I just realized the beeping shouldn't be, I'll have to fix that. There must be another, oh, it's this one. That's fine. It's the same thing. That's okay. Never mind. Sorry. Ignore me. Oh, I was going to say I could put the levels back on the lines, and we can see that we've closed above the pink line, and the pink line's starting to flatten out. So the chances of a bounce here are increased, but we still need a setup to do it. So we might be able to get like a trap underneath it. Wait, did this trap? This is why I missed those lines sometimes. It did trap. Well, it double bottomed, I think. We're so close to the low here that I prefer that gets taken out. But it did on ES. So this is exactly what I was talking about. That like you can get one doing something and then watch. So now what we really care about is if ES sets up. Because NQ probably can set up too, but this is the one that got underneath. Oh, it got way too far underneath. Never mind. ES went really far, you guys. Look at that. There must have been something related to like a non-tech sector. Like I said, I really don't pay that much attention to the news. I like to know when I need to know when the like anticipated news, potentially news producing events are, but I don't really care what the actual result of those are because I'll see it in the price action. So yeah, I'm looking over here too. The purple bar followed by star, if it's bullish, will produce an extension. So that has not stopped out yet. So technically this is a long if you're aggressive. And then here you can see we're trying to trap this orange bar that I said was too aggressive to short. And so this is the first time we've had any bullish price action here for quite some time. I didn't get a star here, so I didn't take it. The green outline is just a sign that there might be a potential trap. And in this case, it wasn't perfect. It's too close to the low is the problem, in my opinion. We approached the low and didn't get to it. And that usually means there's liquidity back there. And so like, why not go get it? Because that's what the market does, is it eats stops. So it's like, the problem with this buy is that my stop goes under the low day. That's the problem. And it's like, and it's not new low day, it's the low day from like the open. So I'm not saying it can't work. It's just probabilities become lower when you have um, basically algos that are built to eat liquidity working against you. But like I said, it did eat it in ES. So if it does end up, the way I deal with that is I don't take this trade. I can take the ES trade, but I usually don't take this one. My coach does it differently. He will just trade NQ. I will usually not trade it on NQ, but then if it works, I will assume that the next bullish setups will be very strong. Okay, there we go. Got through. Okay, now we've traded under the low of day. Now we can look for traps, but you can see that, these lines are time, or speed, sorry, and the speed of the tape has, or of trades has increased. See that? It's like 1, 2, third wave up. Now, have we made a third wave up in volume? No. Third wave down, I mean. In volume, no. So we probably, it's technically a divergent wave at the moment. There's not a lot of volume down here yet. So they got speed without volume, which is interesting. That can mean it's the beginning of a new like a breakdown. But if it fails, it's usually it's divergence. So, but the divergence really isn't there until you stop going down. So, all right, they did make a third wave down in volume. See, volume got bigger than the previous one, the previous two. 1, 2. This one's bigger, 3. So this down wave is now a third wave down. It's gotten bigger than the last 2 waves. And we got increased speed. So that usually is an impulse move, and it probably means range is expanding. Of course, we weren't consolidating, but yeah, like expanding range from here could be pretty big. So it turns out this short did work. The aggressive short did work. Like I said, there's to each his own, right? Like if you want to take the aggressive shorts and you're okay shorting at the bottom of the into the low of the day. I mean, I'm not saying it never works, but when it fails, I sure do feel like a dumbass. So I usually don't do it, and especially not when I'm live. We do have a fib here from the fib draw. I'm not going to use it as a buy, but see this? So if we bounce, it could be the low. That's all I use that for. Let me just double check what's going on here. Beige book, 2 o'clock. Oh, was the beige book just now? No, 2 o'clock. Yeah, 1 more hour. That's what I thought. Because I've got this in Eastern. I had to double check. So this is all pre-beige book. Interesting. We're just gonna flush right. Okay, right to October lows. That's interesting. Wish I would have caught that. I had the setup up here. I was just explaining shit to you all. So it's your fault. No. But you can see that aggressive short looks pretty good now, right? So sometimes you're rewarded for being aggressive. But it's clearly not balanced. So now we don't even, in my opinion, I don't even want to start thinking about like this might be the bottom, right? I'm gonna let them work it out, and I'm gonna miss the bottom on purpose. Because it's going to take me too many tries to get it right, that if anything, I'll just short when like these break down, right? Like that would be very aggressive, but like see these green outline candles? Once you know it's bearish, you can short when they break down. See that? If it happens right away. So green outline, short. Now it won't work if it's a bounce, right? It's got to be really bearish. Let's go back to the pink line. Closed over the pink line, but notice that all the rest of them, are these flattening? This one's definitely not. back into the channel. We might be coming to the gray one. They usually kind of bounce from one to the next. Like I said, I am totally cool with missing this one. It didn't signal for me anyway. But did it signal here? It did. On ES, we had another, see this capitulation and then this sign of capitulation. And so technically the stars can be bought. You can see this one definitely did not work. And this one's trying to work. It didn't give you much though. Well, it's not stopped yet. It might not be done. Let's see. So they're trying to get to this midpoint. And that's like middle of like what normally happens. But you can see that the channel, the fib channel, is below that. So that it takes a lot of energy to hold it down there. But all they need is like an aggressive seller and it could roll. The two pinks in a row suggest that people are just giving up on the sell side, but like there's not really any follow through from buyers. And you can see that we've gotten very, very, very small reaction in time, in speed, I mean. So there's your volume anomaly. That's kind of weird. I mean, by definition, that's what anomaly means, but I wouldn't think that they would need some ultra heavy volume there. I guess, you know what, it probably showed up because of these guys. These guys probably had like zero volume. That's probably what it is. And so the volume anomaly was probably just like a regular volume bar finally after having like zero follow through. So usually those get traded through in a balanced market. If they're unable to get traded behind, you know it's bearish. But it would be normal to now come back up to 11.085.50. Now that would not be bullish, it would just be normal. That's just like what happens. I don't know, Fa. I was wondering the same thing. I was asking, nobody said anything. I assume it's just because there was a bond auction. Could have been that, or else, yeah, I'm not sure. I don't really care, to be honest. I was just saying, like, I need to know, like, about planned news events, where, like, news events could come up, but I don't actually care what they say. Like, what I care about is the price action. Like, we knew it was bearish right here. So, that's what mattered. I mean, it's interesting. I care about it from, like, a human point of view, but from a trader point of view, I don't care what caused the market to move. Yeah, it's, like I said, the only thing that maybe you could care about is whether or not the cause was something that was anticipated or not anticipated. That might help you, but oftentimes the time you spend digging in to try to explain every move, by the time the move is explained, you've already missed the opportunity. So because there's news algos and all they do is just like read headlines and trade off of them. So like I don't need to know what happened. I just really, since I'm just trading like, now it'd be different if you were trading sector ETFs, right? Then maybe you should probably know what's going on so you don't make like a serious blunder, like misreading price action and getting into something that like fundamentally doesn't make sense. But for futures like this, like NQ futures, like if it's something that affects it, that's all I need to know. Is price action being affected by it? As long as I know that, then it doesn't matter what the news event was. Like, I'll read about it later, you know, because I care about the economy. But I try to stay focused on what's the setup I should be looking for. Because it's already hard enough to pay attention to price action and, like, keep my finger on the pulse of, like, whether or not I should be looking for a trade or not. Like, adding all this extra information of, like, so-and-so said that they think this is going to happen or whatever. Like, it fills my brain with stuff that's the only thing that's going to happen is I'm going to convince myself not to follow my plan. That's what that extra information is bound to do. It's It's going to give me an excuse for following my plan. I'd rather just follow the plan, and like if it's not working, I'll know because I'll take stops, and then I can stop trading. And that's, you know, I would rather do that than like try to guess that like, oh, this is actually because of the bond auction. So, and the bond auction did this, and so what we would expect is for NQ to go higher, but it didn't. So therefore, I'm gonna fade it. Like that's what I'll tend to do. I'll like, oh, where was it bearish? I'll show you. The bear signal was. There were a couple. So that was our first one, second one, third one. This is the one I said that's like the nail. Because you actually made a higher high and rejected. And then I said this one was really this one was down here was pretty aggressive because it went through low a day, but you can see it clearly worked. So those were all the shorts. So now we've got the inverse. We've got the green one showing the volume shift up, and they're actually getting some bounce off of that. So that's the first bullish signal that's actually producing any follow through whatsoever. Like I said, I'm not interested in getting the low. I'm going to see what they do, let them negotiate, and then decide what to do. But what the information that is interesting to me is that my green volume shift bar produced at least one bar of continuation. So that I do care about. And so now I'm going to go back and say, well, where was all the volume on this move down? And have we gotten above it yet? And the answer is no. So this is just a scalp. If I was going to buy a dip here, it'd be a scalp back into wherever the high volume area is. Right there. That would be the target. I mean, you could be aggressive and just take the green bar, but I don't usually do that. Not the first time. Here you can also go volume off the low. It's at the bottom. Yeah. So that's the reason. These being so far apart makes the aggressive long on the green bar better. But what I'd prefer is for them to come back and like retest this low and then bounce, but it doesn't. You don't always get that. So you can try to aggressively fade it, but what we basically know now is that the super aggressive short should be ignored for now, unless you're at a location, which would be here. So if they can reverse this down, we can look for a long. But this green bar producing some kind of an extension suggests that we're at least going to balance here. Because otherwise these just get crushed. So let's see if we get, like I said, a test behind one of these little purple flags, and then a recovery would be the number. That would be the number one trade I'd want. If this high volume node or high volume area was down here, we could look for a reversal. But getting through this high volume area after ripping from the low without pulling back, it's so rare that like your best case scenario now is to target that, and that'd be like 20% of the time, maybe. Most of the time you're not going to hit that. Now, if they pull back in here, do like this, yeah, then it definitely can. But a V reversal with this kind of profile, really rare. Very unusual. You can also mark off the low volume nodes if you're looking for spots to trade. Oops. So these should be your support resistance. Yeah. Here, we'll change the color. That should be support resistance. So then you got to ask, do I have risk reward to trade that range? Because that's probably what we're going to see. Is we're going to see them negotiate that range for a bit. And whenever these VPOCs are far apart, that's what you get. And you can treat it like a double distribution. But if you think it's going to go lower, you want to be shorting from up here, but we shouldn't get up there very fast. So that's what it's like. You're almost better off just waiting for either the trap down here, like I said, where it trades under the low and then bounces back up, or wait for them to, like, chop around in here, come up and roll over. Because taking trades inside of here is just dangerous. And on ES, capitulation traded over on ES, you need to get over this. This. On ES, you need to get over 36.93. So like I said, chances of that happening right quick is not great. They are trying to trap this aggressive seller, and it's not working very well. So this might go lower. Let's see what they do with that. See, they got the aggressive short signal on ES, actually. So had I bought this, I'd probably bail on it. I don't know why I would have bought it, because I'm just not that aggressive, so I usually wouldn't. But if I bought this and then on ES I saw them signaling short, I'd be like, yeah, let's just book. Let's book a profit and get out of here, because they could trap him. I mean, like, it doesn't mean it's over, right? Sometimes those fail when it's bullish, but this doesn't look bullish to me. Like, this looks like a bearish consolidation. So yeah, like now they need to get all the way up here to 86. Oh, they might do it. They need to get all the way to 86 to potentially trap that seller. But those volume shifts down are usually pretty strong. The orange bars and the green bars, like, they're inverse. So the orange on the inside and then the green on the inside are inverse signals. But this one's got VPOC reclaim and a speed trap too. So, like, this is a pretty strong bar. It's just, do you have risk reward to short it? Not really. I mean, you'd have to have a target pretty far away to take that aggressive of a trade into the low of day. I don't know. I don't know. The fact that it's rejecting off the voodoo range level is definitely promising for shorts. That's what they should be doing. Like, what you'd expect is get underneath it, come back up, reject it, and go lower. So if you're a breakout trader, like, then it makes sense. But because, like, then the way you look at it is that this was the breakdown, right? And so if you would have shorted this and been okay, like, comfortable with that in your system, then this one is actually just as good. Like I said, I was not willing to short the breakdown. But how they deal with this will give us a lot of information here. Okay, so they got a significant extension off this green bar. Are they going to trap them? Yep. Oh, wow. Orange bar, green bar. That's pretty strong. They're trying to put bullish momentum in. Impressed. But it's a pink bar over the voodoo range. Yeah, nope, don't want it. It should not be a pink bar here. We shouldn't have seen a pink bar. It should have been immediate. I would have bailed on that. Because it was like, it was going up, but it was just pink. There's just like, warning, warning, warning. There's no buyers. Sellers are giving up because we're above the voodoo range, but there's no buyers. Right? Like, they could pull it off, but I would rather, what I would do is, as soon as I saw that pink, I'd be like, okay, get out of here. Let's see if I can get it lower. But like I said, oh, there we go. So now it's white. So now maybe I'm wrong. Maybe they do rip it up. That first test though looked really sketchy. Maybe they saved it. But yeah, I totally would have bailed on that because that looked This signal, the orange followed by green, should be an immediate lift because it's a sign that they're shifting momentum. They tried to short and then they flipped that around. They did like a judo flip, and it takes a ton of energy to do that. And so, but what you expect is that the market must just be like exploding higher. So when this specific pattern like kind of dies out like that, I don't even want it. And like I said, you get better at recognizing those situations the more stops you take. And the more studying you do, and you realize like, oh, that's why that didn't work, because you're asking a lot of the market to flip that momentum. And while it does sometimes happen, it should be practically instant. They shouldn't have any trouble printing another bar here. I mean, maybe they end up printing one, but at least at the very oh, they did print it. Okay. Let's see. Now did they accelerate? That'd be funny. It was like a delayed handoff or something. That was unusual. I think we're just chopping in this area, honestly. But I could be totally wrong. And in that case, I just missed the trade, and that's okay. But you can see that we tried to bounce off this support with the green bar. Like, that's your best long if you wanted to be aggressive. I'm usually not fading a trend that aggressively. And then now we're testing above resistance with a pink bar. And then, look, we tapped that orange one. So if this closes bearish, that would be your first opportunity to short. The problem is now, look, the pink line is now rising, so it's going to be a lot harder to break through. It doesn't mean it can't. It's just, it's not going to be an easy short. Let's put it that way. It's going to be chop on the way down probably. So I'll just give it. There'll be better opportunities with better risk reward if I just wait. Because I'd be so that's technically a short. There's a volume anomaly on it. It means they're probably going to test up here. The better short now is here. So let's see. Do they get above it? Yeah, it'd have to be pretty bearish for that to work out. You can see the last time we got just a volume anomaly, it didn't really do much, right? Suggesting it's not all that bearish. Whereas, yeah, when you get them and it's really bearish, they get an immediate extension. But if it's balanced, you're going to trade above this and then potentially roll over. So let's see. Like I said, I'm watching for them to trade up here and then maybe turn around and give me an orange bar. That would be perfect. And then I would scalp back to here with the short. I'd really prefer they trade above it, though. Because otherwise there's going to be people who got short here that are really uncomfortable, and they're going to keep the market from dropping. So, because they're going to buy as it comes back to their break-even point. So I want all the people who shorted these to get a chance to get out, break even. And then, but instead of getting out, they push harder and sell some more. But you can see on the profile, there's a high volume node up here. If anything, it's just kind of like unfinished up here, right? And then the next low volume node is way up here. So if I wanted, I could put another one of these up here. Sorry, I'm kind of OCD. There we go. So that's really where you would expect resistance. Otherwise, maybe after testing the BPOC. Oh, here we go. Okay, so it's gotten above it. So I'm prepared to short this if it triggers. It's got to fall back. Oh, it didn't do it. It didn't do it. Wow, they are just lifting it. Okay. With pink bars, that's weird. It's probably just accumulating here. Yeah, they're not going to let. We might not want to short this. See, if a pink bar produces a white bar after it, then it's not time to short anymore. Yeah, this little fake out would have got me. I'm kind of glad I didn't buy this because I would have been kind of upset. Then I would have missed the 10-point move or whatever. I totally would have bailed on this. It looked really sketchy. Like I said, maybe that's a leak. But I've seen this pattern fail so often when it doesn't work right away. But maybe that's wrong. Maybe that's only in certain situations. And like I really did not think that this low was going to hold. But just shows how like sometimes having a bias is problematic. But hey, I didn't lose any money, you know, with that bias. I just maybe missed out on a aggressive opportunity to long. I would never have bought this. It's way too high on the channel, but this one's okay. It's just really aggressive to buy the very first higher low like that. Like then why not buy, you know, would I buy it here if it was green? Like no. So would I buy this one? No. Like I don't know how to, yeah, I'd have to figure out a way to know that this one's okay and this one isn't. I guess it's the only green bar. But a lot of times you see those fail when it's bearish, like this. That was a lower low. So I'll have to look into that. It did get quite a bit higher than the 10. And we're really far away from the 150. Oh shit, that was my short. Fucking A, I got distracted. God damn it. That was the short. Was the star right here. Let's see if they give me an entry. I can take it anywhere in that range. I was totally distracted by thinking about what I would have done had I made a different decision. I can't chase it. Try to decide if I can still get into it if it lifts without having to get another setup. And I think the answer is yes, but with a pink bar followed by a white bar, that's usually not bearish. So this might be all we get. The question is if this one goes bullish and I get an opportunity to enter right here, should I take it? That's the question. We've closed one bar above the 49. I don't think so. I think they're gunning for this. I didn't think they would get there. You do see a low volume node there. Maybe it is just rejecting off of that. But what's my target, though? You know, back to the 2-hour VPOC, I guess. Yeah, you probably have 1-to-1. I'd prefer to get it up here. I can't chase it, that's for sure. There is no question. If it doesn't retrace back up, there's nothing to do. But I'm trying to think ahead in case it just like rips up here. I want to, you know, like it's trying to do right now. If it can get into the range of this bar, I could technically short it still, I believe. They may not give me the chance. Yeah, they may not give me the chance. Well, that blows. I totally would have taken that if I would have seen it. I just wasn't paying attention. The star itself was a good entry. Totally valid. And the arrow just adds more like credence to the fact that this is probably a level that people want to sell because it suggests that there are sellers that didn't get, like they either added to their order or on the way back it appeared that they were unfilled. But it could have been that like as it dropped, they tried to short more but couldn't get filled. So then usually the retrace, oh, there's the retrace. So there's the retrace. Let's see. Ooh. Let's
Order filled.
We're going to try the short. The stop goes up here at 10. I don't really know how bearish it still is, but like I said, it's a cheap shot to see if it is. So we're short.
Order canceled.
And
Order canceled.
Nice. Got my fill. That's always nice. So there's a little bell that rings that gives me the fill, and then the order that's canceled is the bracket stop. That is the one that gets canceled. So I've still got 2 more. Wait, I got 5 more. How many did I get? Hold on.
Order canceled.
Now I've got 2 more. Sorry. I got a couple more than I thought I should have. All right. That's all right. Let's see if we can get an extension here. Otherwise, we'll just trail out. I just got 2 out now. So, and they may just rip it here, but if we get one more rollover, it could be pretty sweet. So we're going to leave it. I don't know how bearish it is. It really is a little bit of an aggressive play, but like I said, I'm going to go with the higher time frame more than anything. So, I mean, if I can get another 50 points, if there's a chance, then it's worth it to me to try. Yeah. Because if we do break this low today, like, it could get pretty crazy. Holding this low is not good, though, for me. Holding that low is not what I want to see. Okay, back to break even. We will wait. Oh, fuck. Did it trail it? Fucking A. Shit. I forgot. Sometimes I have it set to trail. No, it's good. Okay. Like I said, usually when I'm not distracted by the stream, I can manage those little things like the brackets and stuff, but every once in a while I'll change it for like and then I'll forget to put it back. Usually I put it back, but like occasionally I'll have like a trade that just needs to be managed a little bit differently. Or more often than not, it's that I wanted to take a bigger size. Or smaller size or whatever. And so I make the changes, then I'm supposed to change it back. But sometimes I forget. So I just wanted to make sure. And I did not change it. It's all good. We got stop where it belongs. And like I said, I don't know how bearish this is. It really might just not do anything. But but the star here with the arrow is a sign that someone is trying to trying to hold this level. So, but it's already tested it now once, twice. Like, will it stand another test? I don't know, right? Like, we don't know when it's gonna work and when it won't. And they did appear to buy this level. So I mean, it's possible that it just gets stuck in here. There's the sell. That's a strong sell signal. I could have actually added back on that. Hold on. Can I add back on that? I don't think I can. Where's the VPOC for this? It's not prepared. No. You know what? That's interesting. It's not what I expected there. They might be setting that up for a trap. This may not work. Because the VPOCs are down here. That may be actually it. That seller might get trapped. Normally that's a really bearish signal, but because of where the VPOCs are, they're putting that in a spot that I wouldn't expect it. That might actually be just like this one got trapped. They may be trying to actually like set a trap for that seller. Oh, fuck, it's gonna be a green bar. I know it. Now all you can do is wait. But I think they're gonna trap him. I've seen this before. I think they're going to trap him. That sucks. Because the VPOCs are down here. This actually might be really bullish. If they can trap that guy. I'm going to wait. I'm going to stay short. But like I said, I have a feeling he's not positioned in the right spot. Because all the VPOCs are down here. And they're turning volume into the VPOC. Like a volume shift above the VPOCs. Like, either someone's really anxious to get short because they think it's going a hell of a lot lower, or they're just way too aggressive shorting, trying to hold off a big buyer. You know, it's like they shouldn't need to commit a volume shift here with VPOC down with the VPOCs down here. Ugh. I totally just want to bail now because that's like it's so weird. But I don't have a buy signal, so I'm not going to exit. But it's really strange. Okay, so they did green bar, orange bar on the right. See that on ES? So they orange bar, green bar, momentum shift, green bar, orange bar. They're trying to shift momentum back. It takes a lot of energy for that to work. A lot. So they can't slow down here. Like it needs to increase. We need to see an increase here in like aggression. Here's that other support. I feel like such a dumbass if I just bail on it. I don't want to be a pussy. There's no reason not to stay short. But like I said, I think this is weird. But I don't know. If it doesn't work, I'll know why. But it doesn't change the fact that it's set up. So we will wait and see. Yeah, they might just be getting aggressive because it's going a lot lower. I'm going to try to get filled down here. Probably crazy, but you never know. It looks like they're not going to challenge him, so I'm really glad I didn't pussy out on that. It's just really a strange place to get it. I mean, there's nothing wrong with exiting here. I think it's a really good trade as it is. Right? 30 points is awesome. Or is it 20? 20 and 30. So there's nothing wrong with just saying like, hey, it's a good trade. But I already took profits, so I'm just going to wait with these runners and see if we can get an extension. Oh, that's interesting. Aggressive buyer here, but primarily sellers giving up at the top, which is, again, right into this sell bar. It doesn't make sense, but okay. I don't know why they're buying into this. Let's see. That's a really strange move. Like, why? I don't know. I guess it's going lower. Oh, it's because we're at the VPOC. This is the 2-hour VPOC. Right. So people are committing at the VPOC. That makes sense. We might chop, I guess, just like we did here. We might get a little... Oh, that's right. That was the VPOC too. This volume shift was the VPOC. That's why it slowed down. Because it exited the VPOC and was trying to retrace to it and couldn't. Oh, wow, I totally missed that. Wow, I'm glad I didn't change. I guess I could have bought it, but so you can see once we get beyond the VPOC, the natural reaction is to come back to it. It acts like a magnet, and when we can't cross it, it's going to put in a couple more bars. Well, now we've gotten to it. They tried to defend it, and now we're breaking through the VPOC, or at least attempting to here. So we could actually see some acceleration, I guess. If buyers accept that they've given up the VPOC, they're not going to be waiting around. They may try to defend it, but once they decide they lost it, it's over. We did have a prolonged one down here, so they might be firing down for 57. Wow, some shorts got trapped back here. I hope they don't get stuck here. See that the delta. See that delta shift? How it's like big buyer and then nothing, like neutral and then big seller. We do not want to get shorts trapped back here. I mean, I guess we do. We just want to be bullish when that happens. Speed trap up. Okay, if it's bullish, it will extend. they might have dropped those sellers under VPOC. Let's see if they can get back under VPOC. If they can't, I should exit. This is a decent place to, because it should be accelerating lower. And instead, buyers are actually supporting it at the VPOC. So let's see if they can reject here. Otherwise, I should just bail. It's a fine trade as it is. We're not getting acceleration to the downside. Oh, we're 15 minutes from the beige book. Fuck. Hard decision. Hard decision. I haven't given up yet. It's probably the right move. But a hard one to make after holding it this long. Because those speed traps don't usually work when it's super bearish. And for this to go as low as I want, I kind of need it to be really bearish. So I'm kind of thinking about just getting out of my short and being happy with a win here.
Order filled.
Okay, I'm gonna exit. It might be a mistake, but coming into beige book, I really don't want to get squeezed. And that speed trap. Oh, is it gonna flush now? That speed drop is usually this aggressive buyer here is usually an opportunity to rip them down. They might have just tricked me by putting in a pink bar first, but when they don't take him down right away, and then I see this delta over here. It suggests that there's actually sellers trapped down here. So I exited down there. I got a nice gain. Let's see. I'm like, yeah, okay. So we'll see what happens. Let me run to the restroom, you guys. I'll be right back. All right. Oh, wow. So we shorted this on the retrace right here. I said that these are usually good bars to short, but I didn't think it made a lot of sense for this guy to go here because on the wave up to this high, the VPOC was down here, right? So what we would expect is that the better setup is price gets under the VPOC, comes back up, and prints an orange bar. This orange bar is a much better setup than this orange bar because of the location relative to to the VPOC of that wave. You can also do the wave down off the high, and you'll see that this one aligned with it perfectly. That's where this one, I didn't do that before, but so now the problem with this one is it's 10 minutes to the beige book. So the algo doesn't know that, right? So if it was regular market, no expected interference or whatever, then your best short would be that second orange bar that we just printed. But like I said, I'm not thrilled about shorting right into the beige book. Not saying it can't go lower, I'm just saying I can't manage risk. Because my stop would have to go above that orange one. So, now what I decided to do, like I said, we shorted this. I saw this, I thought that was a little bit strange that it was coming so early before going underneath this VPOC. Then they went under the VPOC, and you can see the POC of the 2-hour POC is this blue line. You can see we got under that, but we couldn't get any volume under it on a bearish bar. As soon as we got volume under it, they shot back up with a speed trap. And I said, oh, if this continues higher, they're going to defend the VPOC because the VPOC on the wave up was right here. See that? They tried to trade under it. They couldn't stay under it. They came right back up. So I said, let's just cover here for a win on my trailers. Because I'd already covered... I'd already covered some here, and I covered some here, and so I figured, or I think it's the purple bar, and so I figured let the trailers go now that we've gotten this bullish sign and they're not immediate, because what they could do is get a bullish sign and then roll it over immediately. We've seen that before, like this star, Princess Star rolls over immediately, right? But rather than doing that, they printed up with a triangle and they got a pink bar, meaning that sellers were giving up. And so I thought, okay, this is probably going back to resistance. Let's exit, right? And they did go higher, back up to my entry. But then they triggered short again, and this would be the better short. And had it not been for the beige book, I would have re-entered there. I do expect it to go lower, but I'm not going to trade 10 minutes before the beige book. Like, there's so many funds that like rebalance into these events. Like, it gets really crazy about 10 minutes before, even 15 minutes before, but definitely 10 minutes before. So, yeah, I think it was 12 minutes. I was coming back from the bathroom and sat down, and we were already in this candle, this bar here. But it did come back up. It did give me a chance to take it up here at like 48 after, and I said no, not too close, you know. Had I taken that short on the retrace, I would have just taken 10 points and been done with it. And like, then the question is like, how badly do I need those 10 points? And am I willing to spend 15 points on a stop every single time someone just like pushes a button and covers a ton, you know, into the beige book because they don't want to have risk on. See, now they're getting a volume shift up at the VPOC. Same thing happened here. Same exact thing. So we're sitting at that 2-hour VPOC, not surprised, we're getting chop, right? Whenever we get into this VPOC, we should get a lot of signals that don't necessarily go anywhere. In other words, chopping back and forth, disagreement, negotiation, whatever you want to call it, hard trading, right? So instead, this is the place to exit your trades. Unless the trend is clear. Like, let's say you're going up and you come back into it and then you bounce. Then you try to pull back. And then right here, they can't. Like right here, if it goes higher and then it pulls back and it can't get into the blue and then reverses, that's bullish, right? But when it goes under it and then they save it, you don't really know if it's gonna be bullish or not, because they could just come back through and give it up, right? Like, they're just reacting to the location. There's just traders getting out of positions basically quickly because we've gotten under VPOC. So they were probably stuck short and they came back and got them out, you know? Because, like, what is VPOC? It's just the average price where the place, not the average price, the place where most of the volume is taking place. And so over the last 2 hours, it's right there. Like, that's 2 hours of traders. If half of them are stuck, it's probably more than that. But let's say half of them are stuck. You think we're going to get a reaction from that line? Yeah. And like I said, I'm not even thinking about analyzing this because this is just pre-beige book. None of these signals really mean anything now. At least not when it comes to getting me in trades. There's nothing they could do to get me into a trade here. But we will see what they do with the beige book, and after the release, since there's no like press conference or anything, it's just like a data dump, then we might get better rotations and it might actually set up, which would be cool. But it was an interesting lunch because we had this big drop that, like I said, unfortunately I missed. And then I skipped this one. But then after the drop, as expected, it went into some sort of a balance mode. But it's just interesting that it covered the whole range in like the first rotation and then tightened from there. That's usually a sign that we're going to get a big range expansion, usually continuing in the same direction we've been going. So that would be bearish. See that? Bearish. Right, so continuation would be bearish. To get a bullish reaction, you need to consolidate down here and have a place that you could watch for them to break out of. Well, the voodoo range level is old support. So that's probably resistance, right? So where do they have to get bullish? They can get neutral in here, but they have to get like up here. Doesn't mean they can't. It's just a lot of freaking work. So what's easier is to retrace some of these single prints. So I'm pretty sure, I don't know what the data says, but if there's an excuse for them to sell it, they probably will. Where would I be looking? About 11,002 for the first scalp. And then if the single prints could get taken back, you're looking back at 10,919, like another 80 points lower. I don't know if they can take that out. Now, going up, we've got this volume area low, which aligned perfectly with the pre-market low. If that gets retaken, we could certainly balance in here and then eventually take this out. So if I had to watch a level, it'd be that. Oops. 11.1, right? If they get over that, then we could retrace back up through the range of the day. It's just that once it does that, like, whether or not it continues is going to be pretty tough to decide. Whereas going down, you could get a pretty smooth ride, right? The easier trading is to the downside. If it goes up, though, we might get some opportunities on pullbacks. So I'll take either one. I don't care. Yep, whatever you want.
So notice they're putting in these sell signals, right? And they're having less and less and less effect, right? The orange bars are usually pretty good sell signals, but you have to have the right market conditions for sell signals to do anything. So it's the kind of order flow that you want to see if you're trying to execute a short. But once they start not working, then you have to ask yourself, why am I trying to execute a short? Right? The long signal, the green, worked. So did the speed trap. The star did not, but it was on a pink bar, so, although this one was on a pink bar too. Where's the last volume anomaly? Here. Okay, 1 minute. So we could technically measure all of this, like the volume of all of this. Here. So you could measure the volume of this whole thing. Okay, and that should be our orbit spot. And it pretty much is. Right? And then, so there's low volume node down here, and a low volume node up here. So we can adjust these quick. That one's still pretty much right. And this is all filled in now, so we're going to move that out of the way. Whoops. Wrong one. There we go. Okay. Let's see what they do. Like I said, there's better trading on to the upside probably, but it's the path of least resistance. Least resistance is probably down, but I'm not gonna execute a trade as they release the data. So if they just dump it, like the problem is I might not get a trade set up. Okay, here it comes. Beige book should be being released within the next minute or two. Do not execute a trade here. You're going to get your stop hunted. Sorry, I live near the Air Force Base, so I hear some jets around this time. They usually come out around noon hour. All right. There it is. A small reaction of basically shorts just giving up. The pink bars are just sellers being like pulling their orders out of the order book. It's interesting. They get up to this low volume node. Should be easy pickings if they're... Yeah, see that? This is almost acting like they don't have the info yet. Like, I don't know if it's out. I don't care what it says, but... Oh, is Biden speaking too? Jesus, I forgot about that. Is that live? Ugh, Biden speaking, and there's the beige book. Awesome. Great. So yeah, I think the move down was Kashkari. He probably said something. And then also people were getting like out of longs in preparation for the beige book. So we could retrace some of that. But the fact that there's been like no reaction is kind of weird. I'm wondering if maybe the beige book yeah, here. Now I'm seeing it. I think it was just a little delayed. So I'm just, like I said, I'm not going to take a trade as the algos are reading the beige book. But it's the fact that we're not getting any rotation and we're just still stuck in this consolidation is like, okay. Apparently nothing exciting in there. I guess that's why they call it the beige book. There's just nothing to do here, guys. We just gotta wait. Yeah, we just gotta wait. There we go. There's the reaction. So we just kind of want to wait and see if we get, at this point, like a sudden reversal. But it appears that we've broken out of this consolidation range. I'm not a breakout trader, so I'm not doing anything here, right? I'm waiting for all that information to get absorbed. You can see we had way back here that POC from the drop, and that's where we've not reached. So technically this orange bar could be shorted if you were pretty bearish. It's pretty aggressive because we're responding to the beige book. But I had said earlier that where you really wanted to take those orange bars is when you go lower in the POC, come back and hit the POC. So that is probably the best short we've seen so far during, like, that I've actually been watching. So you could take it. It's just right after the beige book, so it's like it might stop. Like sometimes those algos get it wrong, and then the humans come down and they read it and they're like, "What the hell? Why are you buying?" You know what I mean? So it's you don't really know right away. It hasn't even been 10 minutes yet. There's no rush. There will be plenty of trades. Yeah, I just want to see the cadence settle down. You can see we did have a flip from orders on the bid to orders at the ask versus and then orders at the bid up here. The red went higher than the blue, which is a little bit interesting. Usually that's a sign of continuation higher. So that makes me less comfortable with this short. Yeah, so there we go. Okay, so there's our breakout. So you can see we got the orange bar followed by green bar. That's that momentum shift. These sometimes happen towards the end of moves when it's dying out, but you never want to be short here. But it needs a lot of energy to continue going now. After this push, it can do it. It needs to continue to be fueled. So the chances that this rolls over actually increase as long as we can settle down here. But I'm not going to fight the aggressive moves. But if we come back here and kind of start going sideways now, then shorts are fair game. But I'm not going to aggressively fight the aggressive move. Just waiting. So yeah, it looks like they did try. So this one failed. They're trying to this again. It's aggressive, right? To fight that right away. I usually wait. If you wanted to buy the green ones, that's also very aggressive. But technically valid. But you can see how they're building off of these green ones, right? I said that it was kind of surprising to see these start to work, and that usually is a sign that we're bouncing. But it was into it was after. So we saw this one, and I said that. Let me make sure I got this right. Yeah, so I was surprised to see this. That if it wasn't for the beige book, that this looked like a good short. But then they reversed it. And that momentum shift is something where you do not want to be short anymore. And now it basically it looks like it's going to be a long, but I couldn't do anything in front of the beige book. Ripped up. I said this one looks, again, very bullish,
but they need to continue to push momentum like this one. See how they kept pushing it higher right away? Like the pitch increased. Now here, I would say the pitch did not increase, right? The rate of change of these lines is decreasing. See how they're not able to keep that pink line inside of the top channel? So there may be a short up here if we can slow down. If they go like brrr, then you stop looking for a short. But if they can get stuck here and give us like a short trade, like that might be a good opportunity. Otherwise, it's buy dips on aggressive buyers until they stop working. Well, like I said, I haven't seen this orange-green produce more than one extension for a long time. Usually, they're very aggressive buys, and then this becomes future support, which I guess is kind of what happened here. So maybe this is all you need. That's what I'm not sure about. But I'm pretty sure if this comes back up here, tests above, and rolls over, that's a short. Pretty sure. But as of right now, you can see the green ones for buys are working a hell of a lot better than the orange ones are for sells. So we know that the bulls are doing a lot of work, and that the bears are potentially getting trapped. So your shorts have to target those trapped traders. If you do short this, you want to be taking profits when you get back into these levels where they triggered short and it went higher. But yeah, I would need a valid signal here to short though, such as trading above this and then rolling over. That would do it. So I want to see 42 trade. 42.25. I'd like them to break it by one tick. Whoops. God, how do I guard that? There we go. You don't always get what you want. But yeah, we can see the pink got into the area and now back under it. Now if it gets over it, you know, don't short. Oops, can't see this. Let's see what happened here. Buy signal, see the orange and green? And that increased momentum. ES looks very strong. They're going to make up some of that difference, I think. And now, I know it's hard, but like, it's important with like these data releases. You can't look at this and be like, why wasn't I long? It's like, no. You weren't long because there was a data release, right? You were managing risk. Like, you can't worry about the fact that you miss trades that you planned on missing. If you were like, I don't trade during data releases or into data releases, well, yeah, then of course you weren't long for that. So you can't let that stuff, if you're following your plan, that's not a mistake. Okay, so like I said, to short this, I need to go a little higher and then to kind of suddenly roll over. That's what I need to see. On ES, there really isn't a trade, which is concerning for my NQ idea. It may mean that we're just going higher, in which case I just need a better dip, you know, some kind of a retracement. Because I'm not going to buy a breakout up here. Okay, so there we go. Trading into it. Now, do they roll it over? Preparing to short. The short entry would be 29.75. Sorry, 29.50. But it has to trade to it. I will pull the order if it goes higher. Okay, so order pulled. Cancel.
Order canceled.
Pull in the order. Okay, so we have one bar. Technically, 35.50 could be a short, but the higher we get, the more challenging these get. we'll see. If it just rolls down, I will get hit. Otherwise, I will just cancel it. But I will take it at 35.50. But you can see that we've gotten the pink bar back underneath here, but they're not slowing down at all, right? There's no change in momentum. It's just going higher. Let's see if they trigger me in. Not filled yet.
Order filled.
Oh wow, they filled on MES faster than ES connected. Sometimes this doesn't work. Oh, that sucks. Because I'm trading 8 MES and it hit 50. It hit 36.50, but there we go, good. All right, so stop goes at the top. I don't know if it's gonna work. Never know. All right. We're gonna see if we can get a quick 10 points. I do believe that's a valid trap trade. It's just a question of how bullish is it? I don't know how easy it's going to be to get through
Order
this.
canceled.
Okay, hit my 10-point target on MES. I don't actually think it got there on ES. It's interesting. Okay, I'll take I'll take another. I kind of want to get like 23.50, and then we're gonna run into this cluster here. And that's probably all that you can expect for this first drop. Sometimes they go lower though, but if I can get 23.50, I can hold the runners. If they don't go down there and get it, I might just have to bail because I have a good trade and I don't really have any reason to think this is going to extend if they can't at least get to that cluster of moving averages down here and the value area or the opening range low. I'd like to see them get under the opening range low, which is the blue line. Okay, I really like them to flush it here so I can take some profit into the aggression. As high as like 24. Let's take one. Didn't fill me. Do I just mark it out? Get me filled.
Order canceled.
Thank you. Okay, filled. So, should be just 2 left? Yep, I fixed that problem. See, we came right into this VPOC from the wave down, and I don't know if it's going to break through, right? It acted as a support here. It often does come down, but we've also got the opening range low there too. So it's like, you just don't know like which one of those is going to be the new support, you know? So I all you can do is spread out your orders, and then just see what happens. But I wouldn't be surprised if it's done for now and it goes and makes another high. I don't know, obviously, but I will stay short until I'm told not to be. At this point, like, these runners probably don't produce a big drop, but you never know. You know, you never know. This resistance is from this drop. No, it's from the move. I gotta double check where I found that. Hold on. Good question. It is from. Okay, so this corresponds with this, and that is drawn from the wave off the low yesterday. And so these are the low volume areas of that profile. And you can see the POC is right in the middle, and that's basically what we've been negotiating. And I've got this one, should be right here. That's the line I said we really do need to stay under for it to stay bearish. And you can see that they're not currently doing that. So unless they can reclaim 11,103 or so, it's not that bearish, right? But could we spend time down here? Yeah. And could it get bearish? Totally. It could give it back up, right? But there's only 5 minutes left of this 30-minute candle. And it does appear that we're going to do like a reversal, three candle reversal here. So, you know, I don't hate, in fact, I mean, yeah, I don't hate exiting the short at break even. But I've only got 2 left and I've already cashed in 6. So they're going to give me another green bar here, aren't they? That probably stops me out. I think I should probably bail on this. I hate with a passion exiting at break even. But that looks bullish.
Order filled.
Let's go ahead and get out of here. I'll be right back, guys. I'm gonna fill up my water. Like I said, I know my voice sounds horrible. I'm pretty sure I'm getting sick. I feel fine, but my voice is toast. So let me just go get some more water. I might try some sativa. Sometimes that helps. Otherwise, we'll just sit here in silence and watch. I will be back. All right.
Yeah, back. You can see that when it starts to get choppy like this, you can't just take. I know I took this one, but I'm just saying like you don't. And yes, we got our risk off, right? But you don't want to be. Actually, wait, no, I didn't take this one. I took this one. Got our risk off. Cut runners at break even. Maybe a little bit higher than break even. But you can see that like you can't just take every signal when it starts to do this chopping, because the bar itself like goes almost from one side. When we stay inside, what I'm trying to say is when we're stuck inside this channel, the idea is that the market's not rotating enough to provide good risk reward. So for instance, you can see on the trade and perform algo, and this is it. Okay, on the trade and perform algo here, these are old. You can see that the opportunities were the aggressive opportunities were here, right? The green one, and then on the bottom of the they trapped the orange guy here, right? And then the first opportunity for a short would be up here. But if you wanted to aggressively sell, oh sorry, this is the wrong time frame. I was like, wow, this looks different. This is the wrong time frame. Hold on. Array, no, not 4 hour. Array slice. Okay, 24. All right, so they'll still be in the same spots. So we've got this. All right, so that was this. If you were willing to be aggressive and buy into the face of this just because we were so oversold, or you had a level there, that's all right. All right, then you had a level up here that you could short if we trapped off of, and you had this one to trap off of. If you thought we were still short, you could technically short this, but the location it's inside the channel. So see how this doesn't really produce anything, whereas this guy produces a lot, and this guy produces some because it's sticking outside the channel. This one's right in the center of it, right? This star is better. It hit that level and reversed. So this one is a better aggressive short. And then again, this one ends up working, but it's in the middle of the channel. These are right in the center of the channel. That's probably not going to work very often. This time it does, right? But I skipped it. Now we're at the wrong side of the channel getting a buy signal. I wouldn't take that, right? Whereas this guy is okay, but I believe it stops. Wrong side of the channel, but if it's bullish, it'll work. And then this is the one we took. And now, wrong side of the channel, needs to be really bullish for that to work. See the pattern? And now you're getting, so now you got this one. Is it technically a short? Yeah, it's valid, but look where the resistance is. It's above you, right? So do you want to put your stop behind that bar? Your stop would have to go behind this bar if you get short here, right? So are you bearish if it gets that, like, no, like what you want is a short from up here. You want a short up here, right? So you don't just give yourself a 40-point stop. You wait for a setup that lines up with that location. I hope that makes sense. So on mine, there's just more information, but it's the same signals. There's just more of them. But this is not something, this here, I'm not going to trade. Like, you wouldn't have known about it here, and that's why I took that, and it was that location. I think it's fine. I could have held my runners all through this, but it's really hard to do. My stop would have to stay up here. There's nothing wrong with that. In fact, that's the way you're supposed to do it. But when I meet 2 of my 3 profit targets on the way down, and then I get what's basically a buy signal in a bullish market, I know that the only way that this is going to get really bearish is if they
kill him right away, like the green guys did to these orange ones, right? Orange immediately followed by green gets an extension. Orange immediately followed by green gets an extension. Orange, purple, green, little extension. So green, pink is the opposite of purple, and green is the opposite of orange. So it's just inverse signals, right? So green and then pink, and then if this one was orange, could this be a short? Like it could be, right? But it's a star, and it's not. Your stop would literally get stopped out, and then you'd want to be short right away. So you just skip that because of the location. The location relative to where resistance is not good, and your risk reward to enter short here and put your stop up here would be nuts. Like there's no reason to do that. Like if you're going to do that, just take this one and hold, or wait for it to set up again. Those are your options. And yeah, there's just not a lot to do here. It would be very, very, very aggressive to short a bearish close here. Not saying it can't work, but you're basically just re-entering the short you took here. I hope that makes sense. So if you short right now, or even when this bearish candle closes, what you're doing is I shorted this, I took profits, trailed my stop, and then I'm re-entering that same, on that same trigger, I'm re-entering in the range. You can do it, but it's going to fail a lot because you exited for a reason, you know? It's already hit its target. This has already done its thing. So, doesn't mean it can't work. I just wouldn't expect it to. And like I said, this is really close because it's right at this level, which I identified earlier. So if this one triggers short, I wouldn't hate it. Like if it's orange, like it's okay. I think it's going to be orange. Yeah, that's not bad.
Order filled.
I chased that a little bit. That was probably a mistake. Oh, my stop needs to go. This one might not work because I fucking chased it. So I don't like where my stop is, but I'm going to see if I can get an immediate drop. The stop really does have to go above 50. I executed that really poorly. I hesitated. I'm just going to see if I can get a little scalp here. They're not going to let me out of it, are they? Ugh, I didn't get filled. Like I said, I just don't know how bearish it is. And I executed this wrong. I'm going to exit it for a profit. I executed that wrong. I chased, and I shouldn't have. And then when I put my stop where it needed to be, it was not where I want it. So I'm just gonna call that a win by false execution. It's technically valid, right? But to get it right, you need to be able to put your stop again above resistance, and resistance in this case is here. So I would need to put my stop up here. To do that and still have good risk reward, I would need to enter the trade at like 42 on a retrace. Instead, I saw the retrace hit market and it filled me here. So my stop would have been like 24 points. And I was planning on taking my first profit target at 10 to 12. So the risk reward, now the runners might go somewhere, but really what I want is just a lot of layups. I want to get into trades that I can easily dunk like 10 to 15 points. And with a 25 point risk there, yeah, it's dangerous, right? So when I got a chance to get out at 7 points, I was just like, you know what, bail. It's you didn't do it right. Don't reward yourself for bad behavior. Be thankful that you didn't lose 25 points making a mistake. You know, because like I said, I was just talking about the fact that we don't have good risk reward. So now if it comes back up and reverses out of this area, that's an okay short. Because we haven't hit the target yet. It's just really choppy and it's got a tight range. So there's a good chance that your stop gets hit and then they go without you. And there's nothing more frustrating than that. And let's be honest. So like I said, you'll have to either accept that it might go without you, or take it with really small size, or whatever. And one way or another, it's so choppy right here and tight that it's like, why even put money at risk? And it looks like that trade would have worked. But like I said, I'm fine skipping it. Unless I can have a good reason to put my stop right above here, I need risk reward to be favorable. I can't risk 25 to get 10. I'll risk 15 to get 10. I'm not risking 25 to get 10. So it, like I said, it's not that it wasn't, it is, the signal's correct. Everything's valid about shorting this. There's nothing wrong with that. The problem is that resistance is actually way up here. And so more often than not, it pulls back up and then goes. But now it's hit the target. So now I don't want to trust it. But what I really needed it to do was to rip up here and then a roll over, and giving me like a 15-point risk. That I would have taken. Like I said, I technically took the other one too, but I really wasn't supposed to. And I'm trying my best to limit my my errors, even if they are to my advantage. I'm doing my best to avoid doing that. So. We're gonna vape some Chernobyl. See what helps my voice. might make it worse, but might help. We'll see. The vape is pretty magical. I use a product called who makes it? It's called the Solo. It's like a home vape system. Forget who makes it. But it's a ceramic bowl and yeah, like rechargeable electric vape with a glass tube. It's nice. So this one technically gave you another chance to get in. I guess I could have technically taken that. See, look, this top got me closer. See that? 38. It's still really big. It's probably okay. but it's pretty big. And oh, and they already hit the target. I can't short off of that anymore. They already hit the target. It already got to target. It got to the opening range low already. I can't. I shouldn't expect it. Because then just to get my risk off, it would basically have to extend further. Not saying it can't, but there's times where you're right that it was bearish, but it's already done its thing, and you never go back to that higher low. You know, or I guess it's a lower low in this case, but on this time frame, it's a lower low. But on the 30-minute, it's like it's like they've already potentially created a higher low, and so while the level was good, the conditions have changed at that point. So the odds are better the first time in, but I didn't have risk reward to properly take the trade, even though I technically executed it and did make like $25. But like I said, I wish I wouldn't have, because it's important not to reward yourself for doing something that you're not supposed to do. And in this case, it was the one exception to this would be is if you think it was okay to put your stop at 50 and you don't mind. So again, the problem was my stop had to go here for this entry, and and there is liquidity sitting right here. So generally I avoid those, even though it was a valid signal. There's nothing wrong with the algo signaled that it was a reasonably good spot to get long. But yeah, the risk to reward, I would have to put my stop above resistance up here would have been like 22 points or something, and I was planning on taking profits at like 12. So I didn't like that, but so the one thing I could have done was to put my stop right here. But then what do you do when the market comes back up and takes your stop and then gets here and rolls over? I'd have to take it again, right? So the alternatives are take it, put your stop right here where it belongs, and either take it with smaller size or be totally fine with it taking out your stop and then be ready to get right back in again if it sucks up that liquidity and then rolls over. If you're capable of doing that, it's all good. But if you're gonna make a mistake and short this one with a stop here and then get your stop swept and roll over and then you're not gonna short it, then that probably wasn't a good short. In this case, it turned out to work, but that's beside the point. It's not just about results. It's just like, because sometimes it won't work, right? Sometimes it's gonna come right back up and take you out. And then a lot of those times it's going to roll over after that. So had I been willing to take it twice, it might have been okay. But the other thing I didn't like about that trade is I chased it. I saw it come up, and then I just hit market, sell. And by the time it executed me down here. Because this one went fast. It was purple. And I was filled at like 32 or something. And so when I went up to put my stop and it needed to be at 50, just to be above here, I was like, holy shit, that's almost a 20-point stop. And I'd have to take it twice because it would come up here and roll me over. So I'd take a 20-point stop and then a 22-point stop and then a 15-point stop. Like, I wasn't ready to do that. I wasn't willing to give away like 32 points to get the rollover. Now the problem is where do you get short then? Do you take this one? And like I said, I think it was no, because it's already hit the target. So when it comes back up into that area, I'm not supposed to take it. Unless it's bearish. And here it looks pretty balanced. Although now we're getting underneath this 49 POC moving average, so it may get bearish. I'm kind of glad I don't have any swings on. It's such a weird chart. Like that is, I don't know. I guess if you were going to swing, you'd want to be buying down here. But what are the chances that this actually holds? Like, not good. Right? See how fast that was? And then these single prints need to be retraced. This is my target. I forget to extend these. That's your target. 1100. That's the swing target. Oh, look at that. Wow. They're trying. So they aggressively tried to trap the shorts, and then buyers gave up. That's pretty bearish. I don't trade breakdowns, but it's starting to look bearish. Had I kept that short, well, to be honest, had I kept this short and I took the 25-point stop loss, I would have had to exit everything at like 12 points instead, because that's an execution error. But assuming I did it right and got it on a retest, I would, now that we've made the second push down, I'd probably be out of that trade, because it's not, like here, I probably would have exited it. Oh wait, 1, yeah, 2. I would have exited here. And I'm not saying that's perfect. I'm just saying that's generally what I end up doing. Is I will get short here, pay for the risk, take a third off when it gets underneath the low. Either trail the stop out here, but that's only back to break even. So in this case, once I get under this low, I'm taking the runners. And so I don't even have to deal with this. The problem is that sometimes it goes 50, 60, 70 points, right? But how often do you actually get the highest bar? Like, not very often. Like, for me anyway. I'm usually not shorting the highest one. Usually I'm shorting like the trap over the higher one, which is technically the higher one. Oh, actually, this isn't the high. The high is here. So maybe it would be okay to hold it then. Maybe it would be okay to hold it. I was thinking this was the high, but it actually wasn't. This was the high. We shorted that too. So I took that. We took profit up here. Took this, bailed on it really early because I executed it improperly. And both of those ended up being really good trades. So just goes to show you can have everything right in front of you, still come out ahead, but not do as well as your system says just because you're human. I'm much better at explaining these things and actually executing them. It's like I said, to stick with your plan and make sure that you're following the right rules is very tricky. Because if you try too hard, you'll have rules to get you out of every trade, or into every trade, whatever you're looking for. But generally, I want to overtrade, so I make rules as best I can to limit my trading. But if you overdo it, then you'll have a reason not to be in every trade. So it needs to be some sort of balance that you can tolerate, But I do have a hard and fast rule that if I make a mistake, execute or like take a trade I shouldn't be taking, I have no choice but to exit the trade as soon as I notice it. Yeah. But regardless of if I'm winning or not, but if I'm winning, there's no question I can take it right away. So holding this, despite making a execution error, would be worse for me long term. My results today would be better, right? But the results for me long term of not following that rule would kill me, right? If I'm just holding trades that I executed poorly. Now, if I thought through it and said, yes, I'm going to take a full boat here because I'm willing to take another 2 cars up here, that, that's fine. But that's not what I said. I said I need to put my stop above resistance. I'll get in. Then I chased it. Then I went to put my stop here, and I'm like, oh, fuck, I'm not above resistance. And I'm like, oh, shit, even though I'm not above resistance, I have like a 20-plus stop loss, 20-plus point stop loss. I can't hold this out, right? Take the win. And like I said, the result might be unfortunate because it was a valid trade and it worked. But if I train myself to chase or to spread my stop too far or to move my stop, if I train myself to do it by letting those trades work, it will cost me so much in the future. So instead, if I fuck it up, out. You know, no rewarding bad behavior. You don't have to, you know, I don't. It was a subconscious mistake, so it's not like I need to punish myself. But if I can get paid for making a mistake, I'm gonna immediately cash that in. Because I'd hate myself if it came back and took me out for like a 22-point stop when I was only supposed to risk 12 or something. Like, yeah, like that's the kind of thing I'd bench myself for a whole day for doing. Because that's how you blow up accounts. Is you break rules, like, and don't do anything about it. It would be one thing if I had the algo like automatically getting me into a trade and I trust that it did it appropriately, but it's not that sophisticated. It's just telling me there's a trade opportunity. It's up to me to push the button or decide if I want to push the button. So because of that, you want to make sure that you're only getting paid when you're pushing the right buttons at the right times. Hold on, my cat's getting into something. I'll be right back, you guys. I hear him making noises in the kitchen. What are you doing? No. Really? I have to hide that now too? You're naughty. Naughty boy. You got so many toys. Dude, I tell you, Sphinx cats are a handful. So he's got like 100 toys, right? He decides to go jump into the sink, grab the copper Brillo, and play with that. It's like, are you trying to get blocked? Do you want to rip up your stomach? What's going on? So luckily I went and checked on him. I just worry because that means like while I'm at work and stuff, he could be getting into pretty much anything. The other day, he had emptied an entire box of tissue all over the floor. I'm like, okay, I get it. You're bored, but I'm sorry. You got a lot of toys to play with, and I spend tons of time with you, but needs constant stimulation. That's all right. It's just ridiculous. I'm not saying that there's anything. I mean, he's a cat, you know, like, and especially the Sphinx cats. They're just very, very intelligent, and they need a lot of stimulation. Let's just say it that way. He's normally pretty good, but if he gets bored, oh my god, he gets into everything. So we're back into this low volume node from before. See that? We retrace all the way back into this low volume node. I'm not looking to execute a long trade here. Although normally this would be a trap. We just haven't made a big enough... See, See, this is the move up, right? What we really want is like a 61.8% retracement, because the 50% or less usually don't hold unless it's bullish. And it doesn't look that way to me. So the 60, see right now, oh, this was the 61.8. Okay, my eyes were wrong. Technically, this was the first time when it would be okay. We need an actual setup, and it needs to be a real trap. Let me just see here. Do I have an actual setup? No. Because the trap would have to be on one of these flags, and a trap means it trades right behind it, and then within one bar comes back. It'd have to be this bar. Yeah, it would have to be this bar. Once it closes, yeah, so now it's not valid anymore. So that one's spent, and we've got green bars getting beat. It's probably bearish. Now, I do kind of wish I held this one. That one I could have held, but I got thirsty and wanted to break, and I had already hit my first target, and I was just like, you know what? It's so choppy. Let's just get out of it. But had I held this one with the stuff up here, that would have been nice. But I'm telling you, this was a long time. This is like the longest 20 minutes ever. I'm usually in and out like within a couple minutes, if that. So it's pretty rare for me to hold more than 20 minutes. That would be very unusual, especially short. Maybe long. How much drop? What's your question? I don't understand what it's related to. Are you talking about the retracement I did? The retracement tool? What I said is I don't want to be looking, if I think it's balanced, I don't want to be looking bullish until it's reached the 61.8% retracement. So in other words, I don't want to buy this. And I don't want to buy this. I'd have to get it down here. Hold on, let me turn that off. Yeah, I'd have to get it before I even think about buying something. I would have to get to the 61.8% retracement. Does that answer your question? I'm not sure if that's what you're saying, but the thing is it needs to set up with a valid pattern also. So it needs to make that drop, and then it needs to give me a reversal pattern. And the only reversal pattern that was potentially happening there would be a trap back into the range of this bar, and that did not occur. That would have had to happen to this previous bar, and so that one did not trigger. And so now there's no bull move, and there's really no bullish opportunity until we get down to this or this. And these are so close together, I probably wouldn't even take this one. So now it's going to have to get down here. And then, like, do I really want to buy it at the low of the day? Oh, I don't know. I don't care, honestly. I don't pay attention to that. I just want to know price action. There was the beige book came out today. I'm sure they probably said something bearish in the beige book, or like there were people talking, Biden was talking. Like, it really doesn't matter. I'll be totally honest. I mean, unless you're like an investor, like I'm scalping futures, right? Like, I just need it to go 15 points one way or the other for me to get paid. And I want to do that over and over and over again. So as long as the market's moving, I don't really care why it's moving. What I do care about is I want to know when anticipated events are coming that might influence the news, but I don't care what the actual news is. I'll look at it later because as a human, I care about it. But as a trader, it just feeds into an unhealthy bias and makes me make mistakes. So I don't pay attention to the news at all. Unless it's like, when does the Fed chair start talking today? Like that I need to know, because that's like anticipated. Everybody knows it's coming. They're going to prepare for it. And I'm pretty sure this was a reaction to the beige book, or maybe something that a Fed president said or whatever. But I'm not even going to care about that until I go back to do my review. When I'm actually trading, I just need a setup, and if the news fuels a setup, I'll take it. That's fine. Yeah, I used to try to follow all that, and the truth is like, it's just going to make you make mistakes. Like, you just end up misinterpreting it and then getting angry because like the market didn't do what you thought it was supposed to. Like, that's like one of the leading forms of like tilt for me, is like imagining that I think the market's going to do X and then it doesn't do X. And then then I would try to like make my money back because it just starts a vicious cycle. So instead it's just like, do what you want. As long as you keep moving and setting me up, I'll just whatever. I can tell right here that it was something bearish. Whatever he said, people didn't like it. The price action is more important to me. But once I'm done trading, I can then go back and review it and be like, oh, because like really, if you're trying to take a trade because you think that the algos are like misinterpreting the news, that might be like a month-long process, because like information constantly like drips out. So yeah, like I don't think as a day trader that I'm gonna have I just don't have an edge there. And I'm gonna focus on whatever like helps my edge. So All right. Starting out these wave up with pink bars usually results in that pink bar getting taken out. So there could be a short opportunity up here if they go high enough. But the arrow by itself is really not good enough. Might be able to short this. Let's see if they set it up. It's not perfect. I really want it to go up here and cross this line. I want to get all of the people who shorted this, I want to get their stops, and I want them to roll it over. It looks like they're not going to get there. So this blue dashed line, or dotted, I think it's dashed, is the 2-hour volume point of control. And it tends to produce a lot of signals because there's order flow associated with it. So see, like that is a short. So let's see if we can come back up and if they can give me a cheap entry into that, I'll take it. Hopefully we'll get a flag here, like one of these little purple flags. And then they can trap back into him and I'll get it short. Let's see what they do up there. Ideally, we spike and then fall. But at the time being, it actually looks like they're contracting in range, and that's not something I'm interested in. I don't want to trade a contracted range. I want to get into the trade and see it expand. I want to see range expand on me. Again, apologies for the voice. I'm pretty sure I don't know. I should probably do a COVID test or something. I don't feel sick, but starting yesterday, I lost my voice, and I don't know. I don't know where it went, but it's definitely. I sound like I'm 80 years old, been a smoker all my life or something, but I'm not sure what happened. Hoping I just wake up tomorrow and it's better, but so far I feel all right. Okay, so this would have been so far our best entry, which is not great. Again, the stop has to go up here or even up here. Actually, it would have to go up here above the last flag. So that's your stop is 11, 1, 26, 25. If you wanted to trade it with options or something, I guess you could if you thought you were going a lot lower. I don't have any reason to think we're going to go that low. But again, I'm not trading that time frame, so. But this is certainly a sign of momentum shift to the downside. I just wanted to get a cheap entry. And this looks like that's as good as they're going to get us. But what I'd like them to do is come up here and roll over, and I can get a really small stop that way. But there's a volume anomaly on this bar. That's what these little diamonds outside the bars mean. You can see that sometimes they do produce immediate drops, but a lot of times they get retraced on. See that? How this and this, those bars get retraced, right? Because they've got something weird going on with the volume. So it could be too much volume, more volume than expected, a big delta shift, something unusual. And in this case, it might have been a delta shift because look at that delta here. So let's see if that can act as resistance. Oh, I guess it kind of did. I might have missed that. One step behind. Because see, this is aligned with this. See that? I missed this. Yep, that was a short. I wanted it higher, but seeing that delta there, I could have entered when they rejected it. That's all right. It would have just been a scalp, but that is a missed opportunity there because that was valid. Not paying close enough attention. Okay, so they're trying to trap back in again. See, now we've got a flag here. And as expected, they did trade behind the pink. So this is the long. If you really thought it was bullish, if this closes at 11.099, you'd get in at 11.100. I don't love it, but it's technically valid. So, yeah, but I don't think I'm gonna do it. I just, first of all, I don't like executing it or near the big figures like that. And then plus we got the VPOC right here. I don't know. I guess I could take it on small size. It just doesn't feel very bullish. So technically that is a valid trap. Let's see if it works. My gut says it won't, so, but I'm telling you, sometimes my gut's not that good. The algo is usually better than my gut. Oh, I guess I could take it on a retrace. I could get real cheap. If I can get it cheap, I could take it. Let's see if it drops a bit. I might have missed it again. If it can, let's say, if I should have taken it on the drop. Processed it a second too late. Back into here, it's cheap, right? Because your stop goes here. Yeah, like I said, the algo knows better than me. So if you can get in down there, that's a real easy 1-to-1. That was valid. I should have taken it, especially on the retrace. I just hesitated. But it just goes to show that like bias doesn't help you in these reversal situations. Like it can look like there's no way it's going to work, and you can easily get 20 points. Like what my eyes are seeing is that I find this hard to believe that this would be the low of this, but could it produce a 20-point move? Yes. Oh, now we got that trap back in up here. Let's see if they set up the other way. It's got to close bearish. Weird price action. What time is it? Oh, fuck. It's already the power hour, I see. So if we close bearish, it's a 11.0575 would be the entry to the on the short side. Collect liquidity, roll over, and then you'd be going for the drop. But you can see we interacted with the 2-hour VPOC, and they're trying to save it. So you got to ask yourself, like, is this enough to support a bounce? And my gut says no, but I could have taken this trade for a scalp. Now, if they can break this one, did they break that one? Nope. Now they did. Okay, so now they've broken both. Oh wait, that was, so they hadn't broken? Yeah, they broke this, and now it's this one. Can they break this? We want them to trade to like 26.50 and then roll it over. Otherwise, this might have been the low, which is irritating because it was valid to take it, and I didn't. I just passed on it, right? It does look like on ES that they're trying to trap these guys. That might have been the low. Oh, that's irritating, you guys. Let's see. See now the pink burst. Okay. It's got to close bearish for it to be a valid trap. Look how close it got to this flag. I definitely don't like that. There's stops right behind this. Right up here. Like, the only reason for the algos not to go get those now is because they plan on getting them later. And then this is the, you know what, we'd be shorting right into the cluster of these MAs. It's kind of shitty. Oh, the VPOC shifted up too. Let's wait. I'm going to wait. Too much evidence that this low is being supported by volume. And the fact that there's liquidity sitting up here. They may try to trap some shorts and then bounce. We might actually get a long opportunity. Let's see. Because this rotation surprised me here. Where's the what's that look like? Okay. So there's our low volume node that we're trying to bounce off of. but all the volumes at the highs, which is not very bullish. They want the volume at the lows. If they could just spike up here and break this one and then roll over, that'd be a great trade. Shorting this one is like a little bit iffy. It might work, but it's not great. Where are we on the trading performance channel? Yeah, I don't love it. I don't love it. They might not trigger it anyway. Okay, no short. Now we've traded above this. Now if it rolls over, it's a good short. Totally worth it. Will it always work? No, but when it does, it's good. But it's got to close bearish. We really wanted this one to close bearish to get short. This is a little bit iffy now. Like, it needs to test up there, suck up the liquidity, roll over. You could try it, but it's got to close bearish first. Let's take it with smaller size. Oh, shit. Get out of there. Fuck. Cancel.
Order canceled.
Jeez. Accidentally hit the wrong spot. Okay.
Order filled.
Oh, fuck. It didn't do small size. Fucking A. That messed it up. Ugh. That's irritating. I should probably get out. I left it. Yeah. I meant to take that with small size. They're going to reverse this.
Order filled.
Okay. We're going to flip it and see. So I covered the short way too late, and then bought the green one, which is, I'm gonna see if I can get my stop back, which is a little bit tilty, but it should actually work.
Order canceled.
Yeah, this was not a high odds trade. I accidentally clicked inside of the bid and it put a limit order, and I was afraid a limit buy order down here, and I was afraid it was gonna get hit, so I had to like scramble and hit cancel, and then it had already triggered short, and so I just got into it. So it was, I'm just not executing very well. Maybe I don't feel that great, because that was a pretty sloppy execution. Let's see if they can sustain this or not. That was embarrassingly sloppy. Had I not clicked on accident to buy it early on, I would have been taking the short with a very small size, and that would have made me feel a lot more calm. But the fact that it defaulted back to full size and filled me. So yeah, but I flipped and got long because they gave a reversal signal. Whoa! Why am I long 16?
Order filled.
Jesus Christ! Sorry guys, I'm just making all these mistakes. So I guess I left. I'm out. I exited. So thankfully that worked out fine. But it's embarrassing. So the one I put in on accident, the brackets didn't cancel. And so when we went through, it filled the bracket orders as a long. Okay, that's probably a sign to wrap it up. I'm gonna switch to sim account. So so my win rate is kind of shitty. If anyone who's seen this before knows that usually my win rate's closer to 70%. But there's like at least 2, if not 3 execution errors in there. I guess I'm not 100%. I was definitely distracted, and that was just a comedy of errors, making mistakes there. The first one was a full stop when it was supposed to be a small stop. And then the orders that were supposed to keep me out of the market that I canceled, that were supposed to stop me out of the market that got canceled, didn't cancel, triggered me long. I didn't know I was long. I added full long and got a lift and made like an extra $200. But yeah, it's I'm lucky that worked out, because usually if I'm taking 45 trades with a 55% win rate, usually I'm break even at best. So I'm definitely done for the day. I'm not going to trade in my real account from here on, because that, like I said, that was it was just a mess. Like my decision making was fine, but my actual execution of like trying to grab the window and push, like clicking on the limit order area, and then like not canceling the stops. I thought they got canceled already when I canceled. I hit cancel all, and I guess it didn't cancel everything. Because all of a sudden I look back, and rather than being long 4, I was long 16. It's a good thing I wasn't short 16. In fact, I should make sure that I'm totally out. I've had Rhythmic make mistakes before, but that one was weird because, like I said, I hit cancel all and flatten. Oh no, I didn't flatten. I wanted to flip, so I hit canceled all and then got filled. Oh, maybe that's what happened. I don't know, but somehow when I got long, rather than getting long 4, it like tiered me in like to a full 16. So yeah, there was really no reason to exit other than the fact that I totally fucked it up, right? Like it would have been fine to hold 2 runners there, but I can't have 16 like I can't hold 16 for like 40 points. That's not, I'm not supposed to be doing that, because the win-loss ratio of like 55 to 60% is not going to work out. I'm not going to be able to keep a 60% win rate if I'm trying to hold winners to 40 points. I can hold runners to 40 points, but I can't not take profits for 40 points, because the only time you get paid is if you get one of these. So my apologies if that was super sloppy. I never said I was good at actually executing, but that was horrible. So that was just mistake after mistake. For now I'm gonna blame it on being sick, but I think it also had to do with just being distracted and flustered, because like I said, one mistake led to another one. I'm very, very, very fortunate that worked out to my. It could have easily been the opposite. I could have just turned my Green Day red. Of course, the frustrating thing is, like I said before, if I make a mistake like that, I have to exit. That's the rule. Once I catch myself, I need to be out. And like technically, I had no reason to sell, so I could have stayed with the runners and remained long. Ooh, my voice is going. But yeah, I'm closing the broker and not taking another trade here, because that was embarrassingly bad execution. But there was no reason to sell. I guess. So just to review real quick, the reason I got short to begin with, the trade that I was supposed to take with small size, is because we traded over this pivot and then reversed, but it was a purple bar, which is not what you want to see when you're entering a short. And this resistance pivot here was not as important as these. If you think about where everybody got short, it was here, right? So I had a sense that this was going to get filled in. And that's why I didn't get short here. Well, I did, but then I canceled it, right? For like a 7-point win. Because I thought, oh, they're probably coming back up here to test this one. Well, they did. They took the long way, right? They went all the way down first. And this pivot was not expected by me. I did not expect this to hold. In fact, it might still not. But it was totally valid to buy. And I need to train myself just to take those trades if they're valid. There was no reason not to do it other than the fact that this low did not look secure. But in futures, and especially on Q, what they do is they let it go. They go collect liquidity, and then they rip it down. So most likely this is a short, and this long was valid, right? So I missed this one. I tried to take this in the middle of the range, which I shouldn't have. And I knew that, and I tried to take it with small size. Accidentally bought with small size, canceled, and sold with full size. Then realized it wasn't going to work. Saw the green candle forming, knew that that was a buy signal, went long. Then rather than just covering my short, it got me in to 8 more. And then I was long 16 all the way up here. Only to look back and see that my P&L had exploded a little bit from like a average $200 day to like a $500+ day. And I was like, oh shit, I got to get the fuck out of this. And got out. So that's how that happened. But you know, we did see earlier, even though I made the execution error here and just didn't get the trade I wanted, which was to short up here. I wanted to short in this area. I didn't want to short down here. And after I saw the orange one and it started to retrace, I just hit market sell, and this had been dropping that I got filled at like 33, it said. So it was way down here, and it made my stop way too big for comfort, even though it did end up working out. This is clearly a short, by the way. If I wasn't benched, I would have taken this one. Or actually, this one's better. The star. I didn't see the star. This one's better. Stop them out, roll it over. Now, it didn't reach this one. Or did it? Maybe it did. Awfully close. But anyway, so we got lots of points there. I can't even count them because they were in weird sizes. Then I got 7 points here. It should have been a lot more. I also shorted this one we shorted this one together. I got 20 and then trailed out at break even with the maybe just a little behind break even. So let's call that like 15 points. And then there was a long, right? Didn't I take a long? Oh no, this was beige book. This was beige book. Forget where I started the stream. Noon? It was like here. Did I not take this long? Oh, because the VPOC was way up here, maybe. This long was valid. I'll have to double check and see why I didn't take that one. I probably just said it was too aggressive. Yeah, this was dropping so hard that I said I wasn't going to take the first one. That's right. I remember now. It looks good in retrospect, but it's no different than this. Big drop, green candle. Can easily roll over. Okay. And then I had some trades this morning. All in all, good results. Horrible execution. Lots to learn from. My reads were okay. I just didn't accept that the algo allowed me to buy here for a scalp and potentially hold runners. And then the execution errors here were unacceptable. So, will not love reviewing this session with my coach, but I know what happened. So, the solution is probably don't trade when you're not feeling great. Maybe don't trade the real account when I'm streaming because I'm distracted. And maybe just trade smaller, or just get my execute until I can get the get into a flow basically and have some successful executions. Because what ends up happening is make one execution error, and then the frustration and embarrassment of that one leads to other execution errors. So, and then making me feel like you have no idea what you're doing, right? And that fear of I have no control makes me do stupid shit. Gets me tilted. Yep, that was definitely a good short, and it did set up for sure. In fact, I wouldn't be surprised if my coach caught it. Let me see. The room. Let's see. Okay. They might be done in the room. No one called out this trade. I'm kind of surprised. It was totally valid. It probably means just no one is actively trading. A lot of them trade just in the morning, and then the couple who trade the afternoon often don't trade the last hour, so or at least last half hour. This was not in the last half hour, but I'm just kind of surprised no one called this trade because it's good. Simon might have called it on voice. I'm not on the voice there, so he may have called it out, but that was a valid trade here. And had I not been flustered, I would have basically made back. Had I not made the execution errors here, I wouldn't have made as much, right? But then, because it ended up working in my favor, but then I would have taken this short, or else at least this one, and I would have made that fair and square, right? So if you follow the rules, eventually it sets up, right? And technically this one was valid for me to take too. So had I followed the rules, I should have taken this and taken this, and your day is done. Because I mean, think about that, right? You're getting in at 11,100, and you're getting out at 11,150. Even if you took one NQ, right? I mean, $20 for every point, right? For the NQ, if you're making $50 or 50 points, that's $1,000. Like, I know people who would do some really nasty shit for $1,000 in a day. Right? So like, if you could make $1,000 in 30 minutes by just buying this trap and selling this trap, it's the same exact setup, just inverse, right? We have a flag or a power bar, they're called. We trade below it. We trap back in within one bar and get a bullish bar. This one, we have two of them. Flag, power bar, trade up, through it, above it, behind it, bearish bar, get short, you have to hold through a little bit of heat, but look at that move. So this is 50, that's $1,000 right there with one, right? You'd be done right there after just this. The one trade I skipped, well, I took it late, I got half of it. Then if you got this one, you could be short, you could short this with half size at like 40 and then add on the pullback because you know your stop is up here at the top of this, and so you could add it like 50. So let's say your average was 45, right? And you got 10 MNQ, right? So, or one NQ. So 45 already, you've made 40 points, right? So you're looking at almost a $2,000 hour, right? Now, let's say you don't want to risk, what would it be? Like, so the problem with trading NQ, right, is that you are risking 15 points of loss. So that's $300 if you're wrong, right? So let's say that that's too rich for your account. You can't risk losing $300 every time you're wrong because you'll go broke, right? Which is a realistic problem if you don't have like an account that's at least like 20K, let's say, right? Let's say you have a 10K account and there's no way you can risk more than like 150, right? Well, you're not going to make your stop smaller. You're just gonna trade micros. So let's say you took 5 micros, right? So that's $10 every point. And then if you risk 15 points on every trade, you're risking $150 per stop, right? So let's do it with 10 micros. Let's say you did the same trades, right? You got in at 1100 and you traded it up here and just gave it up at 50 because you're like 50 points is a good trade, okay? With 5 micros, that's $500, right? Now you get short when it tells you to get short, which is here. And you don't even buy it, you don't even add on the retrace. And you're just like, okay, I'll short it here and I'll, once it gets started, I'll just wait for the first bullish bar or bearish bar to trade, right? So you just wait, and you'd still be in it now, right? But you'd already made $40. So that's another $250. So you're already up $750 in this hour. That's a pretty good hourly rate. Now, if you would have taken a stop back here, or maybe you tried to short this and took a stop, like maybe you'd be up maybe, let's see, maybe $300, let's say, if you traded like I did and didn't make all the right decisions, but you only traded 5 micros, probably still make $300 today, right? Just by, I mean, like trading not the whole day, but since the stream started in the afternoon. Even if you did everything I did, but you did it right. No, I'm sorry, I didn't say that right. You did everything I did with the mistakes, but you only traded with 5 micros instead of 8 micros. I made almost 600. 575, I think. 570 something. So with 5 micros, you might have made 300, right? Even though I made mistakes in almost every trade, right? I exited too early. I entered too late. I was forced to scratch a trade because I didn't execute it right. Like all of those mistakes, and I still made $574 trading 8 micros. So now with 8 micros, keep in mind, if I get a stop, which happens, right? That's $16 for every point, and there's $15 points in a stop, so it's about $240. Now, if I take 3 stops in a row, I'm done for the day. So my max loss is $800, but if I took 3 stops in a row, I'm down $720. And what I've learned is even if I was up $1,000 and I give back $720 with 3 stops in a row, the likelihood that I'm going to end the day at a high water mark is like 10%, and the likelihood that I'm going to lose more and end the day at the low water mark is like 80%. So if I take 3 stops in a row, I'm done no matter what I'm doing. No matter where I am on my day, I'm just finished. 3 stops in a row can't happen. A new rule that I've been implementing that will help save me money, hopefully, is if I take 2 stops in a row, I need to cut size in half for the next stop, for the next trade. So in that case, right, I said I'm taking 8 normally, which is $16 per point, and then 15 points is $240. Well, if I could only take 4, then I'd only be risking $120. So 3 stops in a row, after 2 stops, I switched it to 4. Well, now I've only lost $360. It's a huge difference. Huge. In my opinion. That's a big difference psychologically of taking a $360 loss on a $25,000 account versus a $720 loss. It's a big difference psychologically. And all you have to do is, if I'm taking 2 stops in a row, the next trade is half size. Right? So then all of a sudden I've only lost $360. Well, now I don't have to quit. Is the idea. Is I can now go either down to 2 and work my way up, or just stay at half at 4. And now if I take 3 at 4, right? So like 360 plus 120 plus 120. Well, now I'm at 600. So it's, I certainly couldn't take I could only take 1 more, and I'm pretty much, I can't risk another one, because then I'm up to 720 and my max loss is 8. So I can't take another trade, because if I did, I'd be risking going over my max loss, right? So I still, even if I say like I hit a max loss, like that doesn't necessarily mean I lost $800. It means I couldn't risk another stop, because I can't go over my max loss. Like I've literally, like I can't do it. I have to quit if my stop would meet or exceed the max loss. Yeah, sure, Hefe. You bet. Give me 1 second, Hefe. I'm gonna be sure. Yeah, we can do a little class on profile. You don't know the volume profile? Volume profile is super, super essential. It's like your classic futures. You need it. It's your core class that you take if you're mastering in futures. Like if you think about it from like a university standpoint, volume profile and market profile is like your one of the core classes that you must have. Okay. So do you know how to find the value area high and value area low in POC? Do you understand what it means? Like, do you know where are you at? Like, do you know how to find it? You don't know. You don't even know what it means. Okay, so best case scenario, what I would do is I would read a book called Mind Over Markets by James Dalton, and then do a YouTube search for volume profile, and then you could look up Dalton too, and you'll get his theory. I'll still do it, but it's like I said, it is the information you're gonna get from just reading the book and like doing the exercises is gonna be better than anything I could do in an hour. Like but like I said, it's essential. Like you shouldn't be trading without knowing it. So yeah, give me a minute. I'll come right back. We'll do it. I mean, I'm not really going to do anything at the close anyway. I will be happy to do a quick little course in it. I wonder if I should. What I might do, Hefe, is yeah, I'll go over it with you quickly because if my voice felt better, I would say I just stop the recording and start a new one. But there's just so much information that I'm just going to give you a quick overview of it, and then I'm going to let you go read the book. But I'll give you a teaser. Just give me 2 minutes. I'll be right back. All right. We'll see how long my voice holds up. I got another water. Hopefully this will help. So, volume profiling is basically a way to look at the market with like as a distribution, similar to what you would see in statistics. So if we open up the NQ profile, what we'll see is this is the market profile on the left, the blue and the teal or whatever, and then the volume profile on the right for each day, right? And so what this is showing us is for the market profile, it breaks it up into periods, which are 30 minutes long. So you have A period, B period, C period. Each one throughout the day. If you look real close, these are all letters, and that's how you know what time it occurred. Is by using the market profile on the left. All right, so if we look at today, you see how this is like an N and an M. All right, so you could look if you got close enough, and you could actually see what happened each 30-minute period. And like, so L period got down to here, right? L period got down to here. L period got down to here. I can't tell what period this is. But as you build further and further away from the center, you add on to it. Wow, they're so small I can't see it. It would be helpful if I could actually read the number. It doesn't really matter, but I mean it does, but not for this conversation. But the idea is, okay. Yeah, no, they're totally related, Hefe. They're related. Like I said, you will need to read Dalton's book. That's none of it's going to make a ton of sense until then. But the important thing to keep in mind is that it's just a different way of looking at this. So in a candle chart, like in a 30-minute candle chart, every period is 30 minutes, right? Every candle period is 30 minutes. And so here it's the same, but every time the period changes, they switch to a different letter. So, and that's how and the constant on this chart is time. So every period is always 30 minutes, and you fill in, depending on how far up or down you go on that during that period, you would put a little block at either end, right? So like here, let me break one down. I know how to show this to you. Okay, so today, if we break this down, okay, I believe, where is it? Split profile. Okay, so we have to pick a spot to split. So let's split it 8:30. We're going to split it here. Is that the right one? Split? Let me see. No. What's the button that I pull? I forget. Merge. Undo. Profile split. There should be a way to separate them out. I just can't remember how to do it. I don't remember how to do it. I thought it was split. Maybe I just have to be closer so I can actually see what I'm doing. Okay, let me try it here. No, that just makes a new one. That's not what I want. I want to split them all. I don't remember how to do it. But one way or another, each time a new period starts, they change the letter. And then if that, like L period, was the previous 30 minutes, and we're currently in M period, and it goes through the alphabet, right? So if you can look and you can see that L got all the way down here, and then M only got to here. And so all that's saying is that the 30 minutes right now did not get as low as the 30 minutes previous. Okay, that's all. It's just another way to look at this. It's just profiling it by how far did we get in in each period, each 30-minute period. How far did it get? And so what you end up getting after you profile like that, and you switch, whenever the market switches direction, you'd go like, you put another letter there, and then if the period changes, you shift your letter to the next, from L to M and then to N down the alphabet, right? So you end up getting this visual representation of where the market has been and where it spent the most time. So we can see that the period that, or the price that market spent the most time was right here, because it's the part of the profile that's the furthest to the right, and the parts that it didn't go very far are the single prints, which are here. Single prints always have a single print, just one of these bars and nothing more. So the single prints ends here. Anything below that is single prints because there's only one print. Up here there are two prints, which means we went all the way up, we came back down, and we returned there. And if you look up, we also have a pretty poor high, which means the two highs are very close together within just a couple points. So the likelihood that gets taken out is actually increased. All the theory is in Dalton. You don't have to memorize that. But it's important you remember it, or that you understand it. So now all of this is single prints. So when people talk about single prints, that's what they're talking about, right? And then when they talk about point of control, all that is it's the point where you have the most action, the point that you've spent the most time for market profile, and the point where you have spent the most volume for volume profile. But the concept is the same. It's just profiling by time or profiling by volume. So in this case, the little letters, like I said, are the time period. And so, but with volume profile, which is the gray one, you've got the same concept, only you're using volume by price. So in this case, each one of these bars are one tick, okay? Or you can make it 1 point or whatever. And it's just saying how many contracts got traded at that price all day long, from the beginning to the end. It's the total volume at that exact price, right? So the market profile, where you spent all your time, and the volume profile, like how much volume was done at each price, they work together. You can't really use one without the other one. You need them both. Because the relationships between what was going on time-wise and how much volume happened is going to influence your decision-making. So for the volume point of control, remember, all these are it's just the collection of how many trades happened at that price. But so the constant for this is just price. There's no time concept in the volume profile. It's whatever it's whatever period you have it. So this is for the whole day. That's the only thing with time that this has to do. It's the only thing this has to do with time. Is that it's how much volume was traded at that price for the day. You could also do a volume profile for every hour if you wanted to, right? Which I've shown you before. You can also draw volume profiles over specific places. So let's say, take some of these out. So let's say I identified that this low seemed important, one way or another. It doesn't matter how you come to that conclusion. Maybe it was the biggest low of the day or the lowest low of the day. Maybe it was a big wave down. Maybe it happened during a special event, whatever. One way or another, let's say you wanted to know during that move down, you want to know what prices had a lot of volume go off and what prices didn't. What you would do is you decide where to start that wave. So either like here or maybe here. Let's do it up here just for shits and giggles. And we're going to come down to here at the low, and then I'm going to click again, and it's going to give me a volume profile. So this is the same thing, only that rather than the whole day, it's just where is the volume during that
that rotation down, starting at this candle and ending at this candle. So it's going to change. If I spread this out, it'll move. See? Because volume was put in at the lows. But if I put it here, it doesn't know about this yet. I'm not telling it about that. I'm saying, where's the volume just in this rotation down? Well, most of that volume was up here. So the point of control for the volume profile is the price where there was the most volume traded. Okay, it's the price where the exact price where the most contracts traded between traders, like either bought or sold, more than any other price was, in this case, for that little bit, that little rotation, it was 11,193.25. For the whole day, it's this, right, which one is it? Is it this one? Volume area high, volume area low. Doesn't look like this, so it must be this. So it must be this one. So the purple here, 11,193.25. There we go. That was the point of control. So that is the point. If you look vertically, there's more than one point that covered all of these. And then eventually you get here, and this is the only price, right? There's no other prices that had that much volume. Does that make sense, Hefe? So it's the exact, it's not the average. That's something different. It's the exact price where the most volume was done, right? Where most of the trades happened. Now, it's important to refer to the fact of what was happening on the market profile during that price and why so much volume went off there. But that is where you get the POC. Now, volume area high and volume area low it's based on a statistics concept called normal distribution. And the idea is that if there's a normal distribution, which looks like a bell curve, right? This will just be a sideways bell curve. If you assume that it's going to be a bell curve, that all of your information is normally distributed, that you have the most in the middle and the least at the edges, if that's held true, then the 70% of the volume should be found in the middle, and that's considered one standard deviation. So that is the volume area. It's where 70% of the volume in that period went off. And because of statistics, we find 70% important because of assuming it's normal distribution. That means if I go any further than that, I'm either plus or minus one standard deviation from the POC. Right now you can, so you need to know a little bit about statistics, kind of understand why that matters. But you don't need to know statistics to understand, just to accept that it's important, right? But mathematically, it matters that 70% of the volume was done in here. And so anything, the high mark is volume area high, and the low mark of that 70% is volume area low. Yes. So, and that is in between volume area high and volume area low is the volume area. It's just the high and the low of wherever 70% of the volume during that period took place. 70% of the volume took place in here, 10% took place out here and out here, right? So that's where it comes from. Does that make sense? Okay. You can do the exact same thing for market profile. Based on time, the majority is the blue, is the area, the value area, is where 70% of the market spent. Most of the trades happened in this range during that period. What did I say? Yeah. Sorry. Yes. 70 plus 15 plus 15. Yeah, sorry, I did that wrong. Yes. 70, 15, 15. Sorry. Yep. Exactly. And then you can further go out and say above, if it's normally distributed, I think it's above like 80 something,
that you actually have less than 1% in the very top. But yes, 15% up here, 15% down here, 70% should be in the middle. That's the idea. Now, is it always 15 on one side, 15 on the other? No, it's not. Because price is not always normally distributed every day. But the assumptions where they come up with those numbers is assuming that normally it is. But the interesting thing is a lot of the trade setups that come from profiling is actually looking for the conditions where the norm is not happening. So when we don't have a normal distribution, then there are trade opportunities present themselves, basically. Simply because, the volume area low shifted up. We must have gone up. This shifted higher. So volume just shifted up. There we go. We must have gone higher in price on the close. So yeah, the value area for volume is where 70% of the volume went off. The value area for market profile is the prices where we spent 70% of the time. Right? When they line up, well, that's meaningful. When they don't line up, there's a reason why. And we want to figure that out. So here, for instance, market profiles value area low was here, right? The volume area value area low was here. Those line up. So that suggests that this might be finished. We might be done auctioning down here. We also put in excess with single prints, meaning that we went further in one period than we did for any of the other periods, right? So this for now acts as support for now. If conditions change, they can come back and retrace and fill in the single prints. But for now, that is support, is the single prints. When you move away from single prints, it's generally going to continue in that direction. But like I said, when it comes to how to trade value area and volume profile, there's just so much. No, you don't YOLO at support. No. You once you identify that this is probably support, then you would you'd have to know where you're trading to, and you can then put, if you're trading like options or something, you could put your stop comfortably underneath this. So once you know, see on the top there, see how there's really no excess up here? They basically have like the same level. It's not exactly, but it's close. The market likes to break these. And it likes to look like this. Does it always? No, but it likes to. It's like, think about it like programmed to. And on the volume profile, it likes to look like this, where we have light volume at the very, very low, maybe a little bump, and then the mid, that's healthy. That means the low does not need to be tested right away. What you don't want is, let me find a better one. That's not a perfect example. This. Even that's not that bad. See, that excess is really small. See how tiny that area is right there? Here, this is a good example. So look here, there's a tiny, 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 tiny little bit of volume down here. And then they all agreed that this volume was good. They all agreed that this price was fair, I mean. Everybody was doing business here. But if you could get business, if you could get a trade-off buying, down in this square, you were very lucky, right? Like maybe like 0.05% of trades happen down there. So those guys, but there's very few of them, right? So if anything, anybody who shorted down here is pretty pissed. But the likelihood that they stay stuck is actually low because there's so much volume right on top of them and they didn't have it didn't go very far with low volume. They basically came back in and continued to hammer away at it. See that? It's like hammer, and you see it on the market profile even more clear. So see the difference between this relative to this and this relative to this? You see that, right? This is a lot of excess. So all up here, you had one chance to do trades up there the whole day. It went up there one time and never returned. It tried to return, but only to here, and then it never came back. Right? How are shorts feeling who shorted up here? Real comfortable, right? How are longs feeling who longed up here? Totally fucked. And they know it because they bought at the top of excess. So now we look at, well, who actually did business there? Was there anyone actually? Was it just 3 people or was it 30,000, right? Well, we look over here and we can say, well, sorry about the beeping. You know, I can turn it down. You can say, I know a ton of people bought and sold in here, right? A lot. Volume was high in that zone. That is a high volume area. All right. It's not the point of control, which is way down here. Not the highest volume area. Oh, sorry, down here. This is the highest price. The price with the most volume was way down here. But there is a area where a lot of traders did business up here. Right? Then if we have an area where there's very little volume like this, that is a low volume area. Very, very few traders did any business there. Now we can ask, why would that be? Well, it's probably because it either gapped over that or it went through it very quickly and never returned. So we go to the market profile and we see, yes, during the open it went through it and then it gapped a little bit and then left it behind and it never got back there. So that's why there's no volume there, because we didn't spend any time there. So you can, it depends. In my opinion, it's usually a high volume area because it's like not just like a node. The idea of a node is like a blip in the profile. So like this is a high volume node. This little blip, that's a node, right? The high volume area is like this. The area with a lot of volume. So the low volume, if there's a low volume area, like this is a good example of a low volume node. But maybe you could say that this was a, was a low volume area, would be all the way, that whole thing might be a low volume area, right? Usually the high volume is, there's bigger, they're wider. So generally you'll have high volume areas and typically the low volume spots are smaller. So typically you'll find low volume nodes, but technically you could have a low volume area and a high volume node. So that's the difference. The area is just like big. It's relative. There's no like absolute, that I know of, way to distinguish between a node and an area. But usually you'll hear people talk about high volume area and low volume node. So if I wanted to do nodes, I'd break this up. So I had a tiny little high volume node in here and then 2 low volume nodes around it. Right? And this high volume node was not very high volume. It was just relative to these. So I wouldn't pay a whole lot of attention to that. But this is a pretty meaningful low volume area, right? Because it just, look how it just fell. Like if you look closely, it just fell off. Tons and tons of volume up here. no vol, like very little volume down here, a huge drop. There's a reason for that, right? And it's meaningful for future trading as well. So same with this. See the big drop off? Right here, big drop. Everybody agreed this was cool. Nobody wanted to do business here. Like that's also meaningful. So what you end up getting is, oh, and then here's the here, let me mark. Here's volume value area. POC, sorry. Volume VPOC, volume point of control. So that was this. So this volume profile is associated with this day, that session. I mean. So now let's see what happens. Right, that we just did. All these marks are based on this day. And I didn't go in there and mess with the profile, but there are clearly some interesting profile things going on too. Like, see this big anomaly here? It's like a hole. See that? It doesn't belong. Like, it looks like it should be a peak, and it's like someone took a bite out of it right there. So that's going to be future support resistance. So and that's the POC, interestingly. So we're going to put that. So the actual, it's like down here. So we're going to get, I'll make it a different color. That is clearly an anomaly. Something that does not belong. Dalton talks about anomalies. It's complicated. It's a market profile concept. But look what happens. That anomaly lines up with this low volume area. Does that make sense? Yes. Price didn't spend very much time in this zone, even though it spent time below it and spent time above it. It makes sense that they didn't do a lot of volume there. So let's see what happens the next day at that price point. Right? This was the top of it. This was the bottom of it. The next day, we trade through it, trade through it, trade through it. Hey, look, market profile anomaly. See that big old bite? Something's up there. Why isn't this clean? I'm not sure, but there's a reason for it, right? Now we look here and we say, oh, that's interesting. It's got, a mark here too. And so this is clearly still important, but look at how far it went. Now the low volume area goes all the way down here. Okay. All the way down there. And VPOC, which was here, back here, right? Volume point of control, that, sorry, or is it, no. Yeah, it's here, purple, right? The purple one that I'm coloring green. Look where it is now. Now it's shifted up. So volume shifted up. We still had this anomaly, right? Is that today? That's today. Yep, so that area is still important. 11,155, 11,171. Those areas are still useful to watch because it has not gotten repaired yet. Repaired means we basically put a high volume area over a low volume node. Okay, look at this one. Low volume node is now the high of day. Normal. That's how it usually works. Okay, this low of day went lower than this one, but if we go far back enough, I bet you will find a low volume node. Oh, look at that. Low volume node. Near low a day except for this excess. Right? Here, I take this off. Pretty close. See? Low volume node. Oh, there's another one. Sloppy, but there we go. So that's where those come from, right? You want to know where the market's likely to turn around. That's it. Like it's, and then what you can do is you can say, okay, like let's say it's yesterday. You're planning for today on your candle chart, right? And so then what you do is you'd say, okay, I know that the low of Tuesday here is above the low of Wednesday and that Wednesday had a number of low volume areas or low volume nodes or whatever down here, right? Nothing to the left, so that's as far as we have to go. This is the only strange, unusual thing. And then we can also see that the actual profile itself looks like a letter P. Do you see that? See how this looks? This is not normally distributed. Normally distributed, remember, looks like a D, a big letter D. Like, that's a B profile, double distribution, D. Here's a D. So this is a normal day. Normal distribution. Balance. This is what the market does more often than anything, is this. This guy. That's normal. When it doesn't do that, we pay attention. For instance, double distribution. One distribution, two distributions. There's two different areas. Only one of them gets the VPOC, or the point of control, but technically you could give it to two spots. You could say there was a session that spent time down here, and there was a session that spent time up here. Well, the session that spent time up there, most of the volume was up here. The session that happened down here, most of the volume was at the VPOC, right? This ended up being the volume point of control of the regular trading hour session. But during that session, there was a time, maybe the morning, where we spent time at the top, and then there was a time like the afternoon where we spent at the bottom. The market profile and the volume profile clearly delineate the fact that there's two distinct distributions of time and volume, right? So now what I could do is I could say, okay, this high volume area here that constitutes the lower volume, the lower distribution, we're going to color that red. And then the one on top, we'll color red as well. And that started right about here. So now if you look to the right, so here's what we knew, right? We knew this. We knew we spent a lot of time up here and put in a lot of volume. And we spent some time down here and put in a lot more volume, right? Very next day, guess where you spend time? Filling in the middle. How high did the market go? Well, it needed to come up here and check on this because this was not, there was no excess here. They were flat at the top. If you look here, there's no excess. It just like stopped at the same spot. It didn't trap anybody. See that? It's like medium volume, slightly less volume, no trading. There's no single prints. There's no excess. It doesn't look like this. There's no tail. That means, and remember, you know that here. So when I see this, I know this high is going to get broken. So the target is wherever there was levels over here. Highs get broken. They fall through, right? Now there's excess. See the excess now? Excess. We're going to color this red. So that's the excess. If that breaks, that is meaningful. Normally it doesn't. Normally if it's tested, they reject. Oops. Normally, if that excess is tested, it's rejected. Let's see. Okay, here it is. So excess here. Oh, we gapped up. Gapped up, came back in, filled it in. So since we gapped over it, it didn't end up, we didn't need to break through it. So we're just spending time there. Let's see, is there one on the lows? Did we get down here? No. I just don't have a lot of information here to work on. Like this is a good excess low, and you can see that we haven't gotten there. This is a pretty poor low. We might break that one. This one had excess. This one did not. This one gets broken. This one doesn't usually get broken on the very next session. And it doesn't. But look, this one had excess. And we gapped over it. And then this becomes trapped sellers, and it becomes support. They traded through support, and they put a bunch of volume in it. That's today. Okay, so 2 examples here of where we had excess at highs. We traded above them and broke through them. That's not bullish. But like I said, to interpret these levels takes a lot of practice, and you need to understand the theories first. It doesn't make sense to teach you all of the trades associated with the volume profile until you know how to build a volume profile and actually like watch what price does when it makes excess or when it returns to single prints, and all that stuff is in Dalton's book or on his YouTube channel, so you can learn about it. But suffice it to say, all of these levels become important at different points, and what you can do. Did those transfer here? Let me see. I don't think they did. 80. They did. So there's just too many. Here, let me do this. If I go delete these lines, should get rid of a lot of them. And then let's delete these lines. That should get rid of a lot of them. No. Is it here? Okay, that was a few. And then what about 80? Are there more on the 80? Erase lines. Should have done a better job color coding this. But what you'll see on even a higher time frame is, get rid of all this. Oops. Make sure we get rid of all these. Yes. Okay. So now I believe if we go to a bear chart, we should be able to see those levels from before. So this is on a higher time frame, of course. But I believe this here was, where was that? NQ profile. Yeah, so those were excess highs. The and then the gray were low volume nodes, and then the lines were anomalies, or points of control were green. Points of control. Okay, so points of control are green. This one's not a point of control. I don't remember what that one was. That's okay. This point of control is here. Yellow is an anomaly, or whatever that color is. Peach. Let's get rid of these. Oops. Shit. Lost that one. I don't think I can undo, can I? Undo chart drawing. There we go. And then, yeah, low volume node, anomaly, low volume node. Okay, so now let's look at the 80 tick. So what we should see is that the low volume nodes produce trade opportunities when we reject out of them, and if you can trap those so these guys, the guys who shorted this, this was excess. The guys who shorted this were in great shape. That was a great short, right? Once we returned to that level, you'd expect them to defend, and they didn't. They gapped above it. See that? It gapped up overnight. So that makes this very bullish, because it should have been rejecting here and it didn't, right? Then we had low volume nodes put in here. So those should be support resistance in the future. Whoops. Oh, fuck. God. Just can't do anything right today. And this one was another access point, easily broken through. That should be support resistance. Okay. Now, we do eventually come back to it. Okay, low volume nodes act as resistance on the first touchback. See that? Low volume coming through here, comes back in, reject, short. They put in a volume anomaly here. Okay, they fell through all of this, no response, no response, no response. They make another low volume node. Now they come back to the anomaly. Try to reject. Oh, there it is. You had to try it twice, but you get it here. That one's right off the low volume node. This one is. And then now there's a POC here. They bounce off the POC. Where do they go to? The anomaly. Another trade. Here for a short. Okay, they break through it. This one you can see bounces off the low volume nodes. This one bounces off the point of control. Here's another one off of the anomaly. Another one off the low volume nodes. And another one off the anomaly. So you don't have to have all of those, right? You don't have to have every single one of them on your charts. But like what a lot of people do is they watch like maybe one or two things. So maybe they say, I want to be a trader that looks for trades at the anomalies. Okay. Anything that looks unusual, we're going to mark. That looks kind of strange. That looks kind of strange. That looks kind of strange, right? And let's just do those 2 days. So let's see. If I marked the anomalies, would I be getting good trades if I waited to get execution there? So Wednesday, Tuesday. Okay. So trade number 1 off the green. Trade number 2. Here, we'll take this out because we wouldn't know about that if all we were doing is anomalies. All right, this one's a little sketchy. I probably wouldn't take it. This one you could probably short. This one looks much better. It trapped underneath and came back, so that's trade number 4. That one went too high. This you might get a stop if you tried to buy that. This is probably a short, might stop. And then this is a short that works at the end. Right? So like, you don't have to know it all. You just have to understand, you just have to have it, you have to understand it enough to build a trade and then know how to trade that one trade really well. And then once you get that one trade figured out, then you build another one. You add another trade, right? But like I said, I think the important thing is understanding how to read this chart so that you could see this and be like right away when I look at this, I don't even have to look at the candles or the algo or anything. I can say, okay, we've clearly been balancing in a range, right? There's some people trapped at the highs with a lot of volume. I'm definitely interested if we can get back up here for a short. And then in the lows, you had this double distribution, which was clearly important. The lower distribution started here. The upper distribution was here. There was an anomaly down here, an anomaly up here. This anomaly was associated with the low volume node, so we're going to mark it. So if you're in the trade and perform room, Simon does this homework for us every night. So even if you don't know how to do this, as long as you're in the room, you're good. Because I'll show you. Like this morning, NQ for today. So he did all these draws and then put all his levels on already. And they're all color coded. So I know these are single prints. I know this is an anomaly. I know this is a previous day's low. I know this is point of control. He does that for us. I mean, we pay him to do it. It's part of the membership dues. You know what I mean? But so you don't actually have to know how to do it as long as you have someone who's doing it in your group. But the result is, like, let's just look at that. These were like old levels, not even recent. Let's see if these had, I don't even know if we reached some of these, but let's just go to like a 24 tick. Let's see if these would have been helpful to have. I don't have anything else on my chart other than the anomalies and that point of control and the single print, and that's it. So let's go back, see if we interact here. Let me change this to fib channels, so we get rid of the lines. So let's go all the way back. I guess this is where it starts. So Wednesday, let's see. Don't I actually want Tuesday? That one didn't reach. I forgot where did that start? Where did I put in the levels? Right here? Is this where they started? Nope. This is a test of it. Okay, so let's start here. We break through it, retest it. So there's a long right here from the low volume node. Bounce off of it. Algo signal, buy. Get this. Bounce off of it, algo signal, buy. Bounce off of it, algo signal, buy. Right, so just by identifying these locations, here's another one, blue square. I wouldn't have caught this one, but this one I'd catch with the blue square. That's a buy. Just by knowing to watch that low volume node and to expect it to be support resistance, I've already made like $400 with like 5 micros, right? Nothing to do here because we don't have any levels. No levels. Let's keep waiting. Here's one. Okay. They put in the low volume node. This one didn't quite reach it, otherwise that would have been a sell. Let's see if they come back to it. They try to get down to this one, doesn't reach. Nothing to do if you only have these levels on your chart and you didn't have someone doing your homework for you. Then you wouldn't know about all the rest of the levels, and that's okay. Nothing to do, nothing to do. They approach it again, can't reach it. This would be a short if they would have, but they didn't reach it. So that's just become the high and the low of the session. It never returned there. Did it just not make it there? Thought it did. Here we go. Long. You could probably get this one as a higher low. Another higher low. Okay, there's the point of control. Short, when it rejects. And that's it, right? So we had maybe 1, maybe 2 stops by just first deciding that we're only going to take trades when they interact with low volume nodes from previous days. And it never made it to the high volume node, high volume area. So is that helpful? I don't know. Like I said, it takes practice, but I think the very easiest way to learn this, read Dalton's Mind Over Markets. Start there. Even if you don't understand it, find a room like Simon's where someone does it the right way and get the levels, right? Make sure you have the levels and then watch them. Don't trade them, but watch them and see if you have a signal that you can find that when it occurs at those levels, that it consistently gives you a trade setup. If you don't, we do, but you probably are. If you already have a trade setup, usually the best thing to do is just to look for the setup you're already looking for, but wait until you get that rejection at one of the low volume nodes. So I'm losing my voice. I'm going to sign off. I hope that was helpful. I'll leave this up for anyone else who wants it again. Sorry about the voice, but it was a long session. I will see you guys next time.